Hi everyone. Am I audible now?
Yes, sir. Good morning.
Good morning. Good afternoon. Okay, now. Okay, some technical issues. Okay, cool, cool. Awesome. All right. Good afternoon, everyone. Okay, let me ask the question straight away. Did you guys start subscribing to the link that I shared with you yesterday? Have you started?
Yeah, a couple of them.
Yes, sir.
Okay.
Yes, sir.
Okay. Okay. Cool. 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 Awesome. I want to start the session with asking if you need any industry specific databases or journals or magazines. I gave a few yesterday, but if there are any more that I can help you with, let me know. No, all sorted.
नेक्स्ट क्लास तक बता देंगे अगर कोई जरूरत होगा तो कि फिर और डिटेल में हम देख लेंगे ना.
Okay, Purushottam. Sure. Perfect. Okay.
Saturday
Any
class.
done. Absolutely. No worries. Apart from that, I want to ask a question. Did you guys do you have something interesting to share? Something interesting to share with me about your industry that you've read or whatever? No?
The thing is about the industry, I'll just tell you about the rating industry, what exactly is going on, because that is very specific and very small group. But if you'll see in this pandemic, a lot of industries are like having a very bad time about the financials and they are not able to earn what exactly they have thought. But in rating industry, it has gone altogether different, because in this situation when the pandemic is there, they are seeing their business whether it's a good or not. They are coming back to the industry and asking it whether my business is good or not. Just check the ratings and all. In that situation, what exactly has happened? If you'll see the rating, the industry which rates other corporate banks or maybe insurance companies, they have earned pretty much good in this situation. Their quarterly earnings has been like 9 to 10% has gone up. Why I was saying this, because see, there will be some couple of industries which will perform good in this situation like pandemic. But when pharmaceutical is there, it's always will be there. But when the industry like rating comes in this situation, they were like having their EDRs. What is EDR? Like event driven committees are happening. They are checking whether their ratings has gone down or maybe their rating is up, specifically about any bond, specifically about any equities, and maybe about the sectors. So I was just going through my own like what exactly going on in that rating industry.
Okay. Very cool. Very cool. Awesome. Thanks for sharing, Kaushik. And I think the more we share, the better we learn. It's like peer to peer. Okay.
Yeah.
Great. What I want to do now is, I'm going to walk you through the deck on the, I have a class presentation, okay, via the Anaticus LMS. I will quickly walk all of us through that deck. And while I do so, if you have questions, ask, okay, and then we can cover anything extra that is needed. Sounds good? Sounds good. It'll also give us what do you call everyone being on the same page kind of thing. Okay. All right. Let me do that. Not many have turned up today, is it? Being a Sunday afternoon. It's like have your lunch and go to sleep kind of time. Okay. Is my screen visible?
Yes.
Yes, sir.
Awesome.
Yeah.
Awesome. Let's walk through this, and
Yes, sir.
we'll understand if we are missing out on anything. Today is the last session on financial landscape, right? Okay, financial analysis. I think we largely discussed what's needed. Okay, it's nothing but being able to make more money for the client. How do you make? Where do you invest? How do you save cost? Simple as that. Okay, covered that. I don't want to spend some time unless you want to stop me wherever you want me to stop. Okay. Well, I think that's the entire landscape of the financial jungle. Okay, we spoke of corporate banks on day one. Different roles they play. Retail banks, we spoke of them. Okay, we spoke of investment banks. What do they do? Private equity, we spoke of boutique M&A firms. We spoke of credit rating agencies, credit research, asset management companies we discussed yesterday, right? When we took the example of the hedge fund. Hedge funds are one of the asset management companies, right? Brokerage houses, I think we discussed about it, like Motilal Oswal's and the like. Okay, and then you have advisory companies like EY and Deloitte and the likes. That's largely what it is. We'll take each of these one by one. Okay, investment bank, I think we've covered it in detail. Largely, to summarize, they help companies raise capital, either equity capital markets, which is ECM, if you recall from the first document I shared with you, or a debt capital market, DCM, or it could be M&A or restructuring or turnarounds. Okay, in any one of these scenarios, they help raise capital or help acquire other companies. Okay. Yes, we looked at this, right? IPO, ECM, fundraising, they do market research, they are investors, they connect clients and investors. I ran you through an actual pitch deck, right, yesterday of legality, where you go to pitch it to actual investors, scope the investors, figure out what the investor psyche is, and and narrate the story. Why will this venture make more money? For the investors. That's the most important question, and probably the only question you need to answer via the business model and the financial model. Okay, and I think we looked at both of those. Okay, so from a this is the front office, mid office, back office kind of thing, right? I think all of you want to transition to the front office, which is revenue generation. It's a revenue unit. Okay, where you advise, you do sales, trading, research, and a lot of structuring. That's the market side of it, right? That's the front office. Middle office is where the what do you call, risk, KYC, documentation, goes on, monitoring portfolio goes on, and the back office largely is the payments and operational control. So most of the global investment banks have a middle office and a back office in India. They also have a front office in India, but the front office staff is very, very small relative to the staff in the middle office or the back office. Okay, and I've given you enough visibility into what the front office does in terms of end products like the pitch deck and making the financial model, negotiations, and the research and the reading one needs to do, okay, to transition. So please work on it. It's not Maggie. Okay, I'll repeat from yesterday's session. It's marination of meat, and it takes time. Okay, we looked at corporate banks. Corporate banks largely, make loans, originate loans, underwrite risk for corporates. This could be large corporates like a Reliance or an Aditya Birla, or SMEs, small and medium enterprises, or even micro, small and medium enterprises. And I think we had this discussion and conversation around priority lending, right? Priority sector lending, and corporate banks focusing more on agri versus corporate banks focusing on manufacturing. So again, every corporate bank is not the same. Okay, it differs as per industry, differs as per the product as well, and the client profile as well. Okay. Yes, I think we spoke of these. We spoke of Yes Bank, State Bank. Okay, nothing more to discuss unless you want me to talk about it. Retail banks, I think we spoke. They largely do credit cards, personal loans, auto loans. Okay, we discussed this, right? And one of the least, in some sense, it's attractive. It's satisfying for people who find satisfaction in them. But relative to investment banking and corporate banking, retail banking is not as exciting, or as sexy. Let me use the word, right, as IB or even corporate banking, right? It's not operationally driven. Okay, so we looked at careers. What needs to be done, right? You need to perform financial analysis, build financial models, advise, create reports. Pitch deck is one of the reports, right? So we saw live examples of that as well. You need to understand the business sector and industry, okay? And I think we discussed this, right? Different data and all of skill set, which is the hard skill sets, which I mentioned in terms of making models, pitch decks, okay, being very good with math, accounting, Excel, and financial modeling. Those are the hard skill sets. Soft skill sets, essentially communication skill sets. If you can communicate well, especially written and listening, you will be able to negotiate and you'll be able to, pursue as well, okay, what's needed. Cultural awareness also very important. That is a part of the interpersonal skill sets. We cover that. Okay. Well, that's, I think we ran this through, right? A day in the life of a financial analyst. And there is no one kind of financial analyst. There is the equity analyst who's different from the credit analyst. Okay. It's like different kinds of trees and different kinds of monkeys on the trees in the jungle. Okay. If I were to use the analogy. M&A, mergers and acquisitions. Yeah. So I want to pause here and ask: do you guys are you aware of any of the M&A deals that have happened? Can you tell me? Can you walk me through an M&A deal?
Yeah, I think it's Vodafone and Idea.
Okay. Okay. Can you tell me more about it?
I don't know. I just heard about this that the Vodafone or Idea, they both are like become View, I think VI, right?
Flipkart and Swiggy.
Flipkart and Swiggy. Vodafone Idea. Okay.
Reliance Future.
Reliance Futures. Nalin, Reliance Futures. Okay, but okay, okay. So tell me more about the deals. Like, tell me more about the deals.
Hello.
Hindustan acquired.
Sorry. Tell me more about the deals, no?
Hindustan acquired GlaxoSmithKline last year.
Okay. Okay. Can you tell me more about it? Why did they acquire? What was the transaction value?
Value was around 5,000 crores, I guess. I'm not aware, sir. The deal value, I'm not aware.
Okay.
Okay.
Nalin, sorry.
Yeah. Okay. Reliance acquired Future for around 24,000 crores, and the main idea is to get into the retail platform, which Reliance is exploring out in India. The idea is also to compete with Amazon. So with recent development, if you have seen the stock prices also, the stock prices, they went up from 138 to 164, and now they are down at 70 rupees. Okay, all this is happening with the space that Amazon have filed a suit against Future that they cannot sell the he cannot sell the Future Group to Reliance because what was Amazon was also having a partnership deal with Future that within 4 to 5 years he will be increasing his share in the Future Group, which Mr. Bayani have ignored and have sold the group to Reliance. This is what I am gone through in this particular 1-2 months. Since I was looking into the shares of Future Group.
Okay. Okay. Sounds good, Nalin. I'm hearing you. I'm hearing you. Anyone else?
Hello. Hello.
Swati, yeah.
Am I-
Tell me.
Yeah.
So I think of Facebook or WhatsApp and Instagram, they are merged together.
Okay, okay. Or what does it mean?
So Facebook acquired WhatsApp and Instagram, all I think all shares or merge them into to increase itself.
Okay, and
And I don't मैंने रिपोर्ट नहीं पढ़ी है सर इसकी but I hello.
So Walmart acquired Flipkart.
Hello, Raju. Hello.
I think there is some
yeah,
technical error.
yeah, yeah.
Yeah.
Hi, am I audible now?
Yes, we
Yes,
thought
sir.
maybe we are not able to
Okay,
listen you.
no. Okay, go for it. Okay, so I'm hearing all of you. Can someone tell me more about it? I'm going to pause here for a while. Okay, yeah, that's
Walmart
fine.
acquired to Flipkart.
Okay.
Walmart. Yeah.
And hello.
Hello.
Yes, Saurabh. Yeah, Saurabh.
Reliance, one of the Reliance Industries, a company from the Reliance Industries acquired NetMeds, the medicine giant NetMeds.
Okay.
It's a 620 crore all cash deal, and they have 100% stake in the equity for their subsidies company. For NetMed is basically the brand run by Vitalik Healthcare Private Limited.
Right.
And the major, like the reason why they merged is given as to improve the quality of the healthcare facilities to the majority in India at the lower level, not the tier 2 cities and thereon.
Hello.
There was a deal between Reliance Jio and Facebook also in April, I think so. The deal was around 43 CR.
Okay. So guys, I hear all of you. I'm going to
Reliance Industry acquisition of Hamleys, one of the toys industry in US.
Okay, Shashank, that's not an acquisition. So here's the thing.
Yeah.
I'm going to type it on the chat, okay, for everyone. To help you refine how to think about M&A. And I mean, I come from M&A, that's my sweet spot, right? I mean, live that life. Okay, first things first. I'm going to type it there.
Yeah. Hello. Hello.
Yes.
Yeah, actually, I have heard today only like Nestle buys Freshly, like they have a deal with the value of 950 million something.
Okay.
Yeah, I have heard that.
That's the first tenant. Do you read that? I put it in the chat.
Okay.
Applies to everyone. Deals announced. Okay, there's a typo there. Sorry. Does not mean deals closed. Let's see what this means. Okay. Reliance Industries, Reliance Retail Ventures announced to acquire future retail, future coupons, right? Abanta,
Yes,
go
yes.
also. Has the deal closed? Has the deal closed yet?
No.
Okay. Why? So let's first understand what does deal announced mean. I'm talking as a practitioner now. Okay, I'm not talking as a journalist or an analyst. I'm talking like a seasoned practitioner. Deals announced means the parties have agreed on the terms and conditions. What? Okay, that means a deal has announced, and as the word says announced, it's made public that the two parties, party A, party B, party C, how many ever parties are involved, they have agreed to enter into a transaction on certain terms and conditions. It will be covered by the press. There'll be a big talk by Arnab Goswami on Republic and still argue on nonsensical things. Those things will happen. That's what media does. Okay, everyone from Lata Venkatesh to everyone from Z Business and CNBC Awaaz will discuss. Wow, 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 wow. Okay, but these guys don't understand it's a deal announced. It doesn't mean deal has been closed. Deal closure or deals closed means monies have been transacted. You understand? Sinda, can you put yourself on mute?
Oh, sorry.
Okay. Deal closed means monies have been transacted, which means there is a transfer of money from the buyer to the seller's bank account, and the seller promoter has transferred the shares, which means the ownership and the stakes, to the acquirer. That is what is meant by a deal closer. What do you think? What's more important, deals announced or deals closed?
Deals closed.
Deal announced.
Sir, Rajiv.
Yeah, Nalin. Yeah.
I have a perspective. I don't know whether I'm right or not, because when I'm into a bit of stocks also. So deal announced is good for the stock market. Okay, this will increase whatever, if it is a positive news, of course this is going to shoot up the share prices. Okay, in that case deal close will not make much of a sense. It have not made much of a sense, but in stock it really plays a role. So I think to announcement, and they make it very loud, whether they are talking in CNBC or anywhere, they talk it very loud. What are the benefits or what they are. It's very hard for me to figure it out whether the deal close is much important for investor or not. For shareholders basically.
Okay, I hear you, Nalin. Fair enough. Let's hear the others in the room. What's important?
The main, what I see, I don't see a share market a lot, but still, deal announced is like play a major role. Why I'm saying it? Because when the deal is announced, that time the share market goes up. People will see, okay, we have to invest and all. That can be a company strategy for earning a lot from that time. But once the deal is closed, no one can do anything because closed in the sense, if the deal doesn't happen, no one can do anything because everyone has put their money. Anyhow, if the deal is closed, then they can earn it, or maybe that will happen. But deal announce is like a situation where, okay, they are going to do it. We'll put now, we'll earn more. But if deal is not happening, then it will be like, okay, they did not do it, but I think we have had a loss or maybe something like that.
बट अगर डील अनाउंस हुई है तो बाद में कैंसिल भी तो हो सकती है, जैसे रिलायंस और फ्यूचर का है. अब अगर अनाउंस हो गया, लेकिन अगर अब बाद में पब्लिक को पता चलेगा कि अगर अब बाद में दिक्कत आ रही है या लॉ सूट्स वगैरह की दिक्कत है, तो पब्लिक पैनिक करके पैसा नहीं निकालेगी.
लेकिन पहले तो डाल चुके हैं, करेक्ट?
सर पुरुषोत्तम पैसा तो निकाल चुका, जिसने निकालना था पैसा
हाँ,
निकाल लिया है, उसको तो
परफेक्ट.
बचा नहीं है. वो 138 रुपीज का शेयर 164 तक पहुंचा है और आज 70 रुपए पे है. तो पीपल हैव मेड प्रॉफिट एंड क्लोज दैट. अब वो अनाउंस हो क्लोज हो उसमें कुछ ज्यादा बचा नहीं है करने के लिए.
And this is one type of strategies also of the companies where they do like that. Some of the times, I'm not sure how they frequent, but some of the times it's like one day they earned a lot, 100 crores, but next day it's like they are not going to earn anything because they have disclosed that thing in front of public. So they know it. Now we are not going to earn. We have earned it last
तो
day.
बेसिकली शॉर्ट टर्म के लिए इट्स फाइन, बट लॉन्ग टर्म के लिए
Long term.
डील क्लोज जो होता है वो ज्यादा बेटर है. जैसे क्योंकि रिलायंस और फेसबुक का जो जियो वाला डील था उसमें अब रिलायंस देखो कितना ऊपर है, 800 समथिंग से 2000 अराउंड तक चला गया था. अब वो उसी तक स्टेबल है अभी भी. तो लॉन्ग टर्म के लिए डील क्लोज्ड अनाउंसमेंट इज मच बेटर देन डील अनाउंस्ड जो न्यूज होती है, आई थिंक.
रिलायंस के शेयर ऊपर इसलिए बढ़ रहे हैं बिकॉज ही इज एबल टू गैदर मोर ऑफ फंड्स आ रहे हैं उसके पास.
And
मतलब फेसबुक का भी तो बहुत मेजर रोल था ना उसका, क्योंकि उसी के बाद से ही तो कोरोना जब चल रहा था, कोविड पीक पे था, तब रिलायंस कितना ऊपर जा रहा था बिकॉज फेसबुक डील हुआ था एंड ऑल. बाकी
Okay. Let me chip in. Interesting conversations. So firstly, we're talking of M&A. So I think we have to change our. One second, guys. Okay. Sorry. Let's first look at whose perspective we are talking. It depends on whose side. I think Nalin's side, Kaushik's side, and most of your side, you're taking a vantage point, the viewpoint of a retail investor, right? You are a marginal stockholder. You have no control on the stakes of the company and the direction of the company, and you are purely dependent on stock price movement. That's the nature of the game in terms of retail investments. Okay, but when I ask the question, deals announced matter or deals closed matter, the vantage point is of the acquirer and the seller, or the investor and the seller promoter. For them, what matters? Also, that you have to keep that mind, that position in mind when you answer the question, and when you also analyze deals. The second is, you know, companies do not announce deals. First of all, companies do not make, they're not allowed to make profits from stock market trading. Okay, if it is caught, it's gone. It's all insider trading. Heard of insider trading, right?
Yeah.
Based on news, the promoter or relatives of promoters, or maybe some unrelated party but still connected with the promoters, will buy or sell stock on the exchanges and make money and take the money home. That's called insider trading. If they're caught, the game is over of the promoters. Okay, so companies don't make money out of that. They're not really, companies who are serious about staying in the business. Okay, they don't really worry about it. They don't announce. You can't casually announce a deal today. Berkshire Hathaway is buying my company. It doesn't. Berkshire Hathaway will raise an objection. What the hell? I never even spoke to you. How can you announce this? Do you get this? And because of which our stock prices goes up and then gets hammered, retail investors can make trading profits, but it doesn't serve the buyer promoter or the seller promoter. It doesn't serve the purpose of the investor, neither the company. Is that making sense to you as of now, Kaushik and others?
Yes.
So now your viewpoint is good from a retail investor's perspective. But put yourself in the shoes of the acquirer or the investment bank who's advising the acquirer or the seller or the investor. In that situation, now what do you think about it?
So deal closed is going to matter. That is, of course. Right. So from that perspective, I think we need to be closed for
Correct.
the mutual benefits.
Okay. So I'll give you some perspective. Okay. If 100 deals are announced annually, world over, if 100 deals are announced like this annually world over, okay, less than 20% close. Does that worry you? So, think from an M&A house. You are at an investment bank of your choice, Goldman Sachs. You are advising Future Group to sell the stake to Reliance Industries. You get paid 4% of the transaction value. Transaction value means what? When monies are transferred from Reliance Industries, the acquirer, which is also the investor, to the seller promoter, which is Future Group. If that money doesn't come, if the deal is not closed, there's no transaction. No transaction, no success fee. No success fee, you don't get a salary and you don't get a bonus. Do you see the repercussions there?
Yes, yes.
Okay. So this is exactly the difference between how a brokerage house जाएगा. CNBC पे आवाज डाल दो, देखा जाएगा. That is a brokerage house mentality. Okay. A corporate house, an acquirer, a serious private equity investor, venture capital investor, an M&A acquirer, an M&A advisor, they think, boss, deal announce हुआ है, deal close नहीं हुआ है. Typically it takes anywhere between 6 months to 12 months for a deal to close from the date of announcement.
Yes.
There's a lot of work at the back end. I've been on certain deals where we negotiated for about a year and a half and the deals have fallen through. They have not been signed. They've been signed, but they have not been closed. Okay. So please, next time you look up. So here's the thing. Who's profiting today? Who's benefiting today? Out of the Reliance deal announcement, out of the two parties, Future or Reliance, who's benefiting? Deals have announced हुआ है ना, but then Amazon sued. You can't close the deal like this because you signed a prior shareholders agreement with me that you cannot sell it to the competitor.
Mm-hmm.
Right?
Mm.
So how can you sell that? Sell the company to a competitor because Future Amazon has an investment in Future Group, right?
Yes.
Okay, Swati, can you mute yourself? Can someone reach out to Swati and ask her to mute? Okay, Swati, can you mute? Put yourself on mute. Thank you. Okay, that sounded like a protein shake after workout. Yeah, or it could be playing with a matchbox and trying to light a cigarette. Right. Okay. All right. So deals. No one's benefiting, right? Neither Reliance, neither Future Group is benefiting here because deals have not been closed, monies have not been transacted. So Reliance technically has announced it, but effectively and legally binding perspective, they do not own Future Group yet. Okay, and let me also give you the scoop that yes, the Jio Facebook deal has been announced. It's not yet closed. Okay, the Jio Silver Lake Partners has been announced. It's not yet been closed. It will take a while to close. Unless
close
and
हो गया.
नहीं हुआ है पुरुषोत्तम. Unless and until monies are in, you cannot say the deal has been closed, because at the last minute you can walk out citing any stupid reason. Okay, so
तो सर ये
next
सब
time
न्यूज में तो आता नहीं है कि क्लोज हुआ है कि नहीं हुआ, वो तो बस अनाउंसमेंट होता है, तो पता कैसे चलेगा?
so firstly, financial journalists do not care about these things because they are journalists. They are not advisors or bankers, right? They just want another TRP bite. That's how journalism works, right? It's very superficial. They rarely investigate the depths. Okay, what is the real thing? For them, it's the feel-good thing. That's the policy with journalism world over. That they shouldn't be blamed. If it is the second question, how do you know it's closed? You got to look up one. You need to have access to the bankers and ask, okay, what's happening? Has it been closed or is it just another gimmick? Okay, a market cap gimmick, as it's called. That's one way. Networks, as a network, very, very important. Second way
I had a question. Sorry.
Second way to confirm is look up merger markets. It's a database for M&A and private equity transactions. They only capture M&A and private equity transactions. From deals announced to deals closed to deals cancelled to deals renegotiated, all different permutations, combinations. They will capture what's happening where. Okay.
इसका कोई वेबसाइट है क्या सर?
No, website hai, but it's a database you'll have to subscribe to.
Okay.
And
So
when you start working at an investment bank, okay, the first 2-3 weeks will be training on merger markets. How to operate the database.
Okay.
It then gets covered on Bloomberg database, not Bloomberg Quint, not the magazine Bloomberg Quint, or not Bloomberg TV, BTVI. No, Bloomberg the database. Okay.
Hello. As you said that out of 100 deals, 20 deals are closed. So why there's such a thing? I mean, 100 out of only 20 deals.
20 out of 100, not 100 out of 20.
Sorry, 20 out of 100, yeah.
Yeah.
So
okay.
Why?
Because there is a competitive bid that comes in their way, and the seller says, okay, I think I'll probably retract. The other thing is due diligence does not go really well. There are red flags in the due diligence. What the seller promoter claimed, it's like way off than the reality. It could be way off to a certain degree, but way off too much is a big red flag. Okay, due diligence in terms of tax, in terms of legal, in terms of accounting due diligence, in terms of sales due diligence, in terms of technology due diligence, in terms of customer due diligence, in terms of vendor due diligence. There are different types of due diligence. Okay, so it might fail. It might say we have a great technology, but the technology is actually not. It's like blah. Okay, you claim you have a great sales team. Okay, let's do some due diligence. Sales funnel is bad. Remember yesterday's conversation on sales funnel? Your projected sales, you're saying this much. Okay, by how? So sales diligence doesn't go bad. You said you have the best vendors in terms of best procurement practices, the best prices you have for the best quality and a just-in-time inventory. Okay, let's do the vendor. And if you figure out the vendors don't like working with you because you don't pay on time, so vendors are shifting away to another another customer. And that's again a red flag, right? Make sense? Does that help?
Okay, yeah. So according to you, deals are announced and then we carry out this diligence and then it is closed and then it is final.
Correct. Correct.
Okay.
Deals announced.
Rajiv, I had a question. What is the objective behind announcing the deals when, because you obviously can't make money out of your through share market, because that will be insider trading, and then there are various reasons because of which the deal can fall out. Then why not just the news come out that they are merged?
Okay, good question. Good question. Now, this whole drama or theater around deals announced, it gets covered on Fortune 500, blah, blah, blah. The entire journalistic blah, 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 okay, is for public market deals. It means when a listed entity acquires another listed entity, or when a private entity acquires a listed entity, or when a listed entity acquires a very large private company. So anything which has a private market connection to it, this journalistic blah blah starts. Why? Because as per regulations, okay, you need to disclose it to the SEC or the SEBI or the FSA or the Monetary Authority of Singapore, whichever, wherever stock exchanges you're listed on. You have to disclose as a regulatory need, as a compliance need.
Okay, understood. Yeah.
Why? So that the regulator can then track it in case there is an insider trading, or in case there's a massive block deal that happens just before the announcement, then that is subject to the regulator's interrogation. And if it falls unfavorable, then the promoters are screwed.
Okay, understood.
Right? Make sense?
Yeah.
You probably do these three names sound right?
Yes.
Do these three ring a bell?
Yep. Galleon Capital.
Galleon, Rajat Gupta, Rajat Ratnam. What was that? Yeah. Before a massive deal or massive investment, they used to trade right on the stocks.
Yep.
Right. So guys, insider trading can have that kind of a consequence. It can be like the death knell or the for your financial career. Okay. So to my second part of your response is, if it's a private market, okay, it's a private market, no such blah blah happens, or shusha or any theater happens. It's quiet. I mean, promoters are happy. No need to talk to journalists who understand nothing about what the actual business is. I'm happy, the promoter seller is happy, the seller is happy, the investor is happy. Chalo, fine. Let's negotiate the deal and get things done. Private markets, these things do not happen. Okay? And about 70, I would say about not even 70, 80% plus deals world over are in the private markets. The only 20%, actually 10%, 10 to 20, I'll be 20%, chalo, to be a little more aggressive. 20% of the deals world over is related to public markets. 80, 85%, 90% is private markets. Which means, okay, the noise that you and I read, I mean, I don't read, I don't care about them, is just about these 15, 20% of the big boys. Okay? What this means for you as a career option, right? When you work at an IB, especially M&A or restructuring or even private equity, you will end up dealing 80% of the time with private markets. And trust me, guys, that's where the fun is. That's where the maximum amount of money is, not in the public markets. And once you've tasted blood in the private markets, you will mock at the public markets. You will just smirk and move out, or just do your own shit. You don't worry about what the media has to say. Does that answer your question, Kushbu? Helps you understand, get the perspective, get you more clarity on what this space, this jungle looks like.
Yeah, definitely.
Okay. So
Hello.
yeah,
Sorry
Megha.
to interrupt again, but I just have one more question.
Yes.
When we are
Ask as many.
when the deal is announced, okay, and we are carrying out those due diligence, and suppose if the deal is not closed, okay, because of certain issue, so do we have access to those the diligence reports even if the deal is closed?
You will not have access to the diligence reports unless you are on the deal team,
Okay.
or you are maybe a senior level professional at another iBank, and you have connects with your former teams. Like if you were with Rothschild or Citi, and now you're probably with um, another iBank, and you discuss deals, right? You said, these are the problems. So that's the only way. So that's why the trust and the networking is so critical in this,
Yeah.
right?
Okay.
And uh, you know what? I will walk you through a diligence report today. Just to give you a flavor. Just to give you a flavor. Okay.
Okay.
Sounds good, guys. Are we all on the same page now? Gives you more clarity. Nalin, Kaushik, Purushottam.
Yes. Yep.
Yes,
Yeah.
yes, yes.
Gets you some more
Yes, sir.
clarity. Okay.
Yeah.
Now that's the first principle. Deals announced does not mean deals closed. What is more important is deals closed, working. And because about 85% is private markets, if deals are not closed, it takes a beating on your profitability as an investment bank. Plus, the investor and the seller promoters, it's frustration for them. Shit. Oh God, we should have seen this coming, right? Or should have generated more options. That's why it's a high risk, high reward game. And realistically, if you're able to do about 12 to 15 deals, when I'm doing deals means closures, okay? If you've done 12 to 15 deal closures in your lifetime as an investment banker, you're God. You're like the God of this space. Why? Because to close 12 to 15 deals, you would have worked on 100 plus deals. Okay? You get this? So it's not that you meet a banker and you would have done 100 deals. It's a lie. It means he or she has worked on that 100 deals. It's a blatant lie. Sorry, sorry, Nalin. Go for it.
Just taking you back to the future deal. Can you just throw some light that when this was when they have approached a future group, have they not seen this coming from Amazon that it's gonna file a suit?
Exactly. That brings me to this. Yeah, I will throw that light, Nalin, and that brings me to the second point of analyzing and assessing M&A deals. Okay, which is the following. Point number 2, point number 3. I will address it together. The shareholder.
Raji?
Sorry. Yeah.
Yes. Sorry for interrupting. What I was saying is, can we just type it like the usual on the Word? Because in that case, we will have in case we also can have a document. I'm noting already, but if it is okay with you, means.
I'm okay. Let me pull it. Good idea. Sorry. Hold on. Okay. One second. Okay. Let me share my screen now. Cool. Is my screen visible?
Yeah, it's visible. Thank you.
Okay, great. So the second
Yes, sir.
point is basically, it brings me to the second point, right? Which is, you know, terms of the shareholders agreement. It's called an SHA. And what is the precedent transaction SHA? What does this mean? Okay, what does this mean? It's like okay. So this is basically what has been the terms between the agreement between Reliance Industries and the Future Group. Okay. Now, is Future Group buying the entire company? Is Future Group buying a certain section of the company? Is Future Group doing an asset sale? Or is Future Group completely buying out the company and merging the company into the entity? Okay, that's very important. And the precedent transaction shareholders, which means the target company, okay, the target company, right? Just one second. Terms means what is the transaction type? Very important. Is it like a asset sale? Okay. Or is it a business unit buyout? Or is it a company buyout? Or is it a brand buyout? What is it? You have to first ask that. Look deeper into the terms of the SHA. Okay. Precedent transaction means, okay, any clause or any of the clauses in the previous SHA that prevent a future transaction, like a possible future transaction. Now, in the future group's case, Amazon had invested, okay, but Amazon never mentioned that Reliance is its competitor. And but Amazon said that Future cannot sell its company to any competitor. Can you add both these clauses together? The clause one said that Future Group cannot sell its company or any of its stake to a competitor. However, it does not explicitly mention that Reliance is the competitor. Now, can you make sense out of that?
No, I'm unable to understand.
Okay, so
Hello,
yeah,
sir. Can you explain one more time?
yeah. I'm writing it there. Okay, so the clauses is specific to the Reliance and Future transaction, right? That the Future Group cannot sell stake to a competitor. That's all it said. Okay. However, Amazon never said that RIL is a competitor. Now, can you make sense? Add both these together. Now, can you make sense?
But
देखो क्या हो रहा है previous transaction में when Amazon invested say okay you cannot sell to a competitor, it's not defining who the competitor is. Correct, it is not defining who.
जो एग्रीमेंट बनता है उस टाइम पे थोड़ी पता होता है कि who is going to be competitor, वो स्पेसिफिकली नेम डिफाइन करना पड़ता है क्या उस टाइम पे?
Exactly, you have to define the name that okay specifically you will not sell to A B C D E F G H I J K L M N O P or anyone who is in certain businesses. अभी वो mention नहीं किया है उसमें because when this happened Reliance was not getting, was not too serious about the retail business going online and also offline both.
Mm-hmm.
And Amazon never considered Reliance as a competitor. Now it is coming to the fore just because Reliance really is big. Jio has grown bigger than expected, and it is now challenging Amazon's online marketplace. That's when Amazon thinks contextually, not factually. Contextually, yeah, this is a competitor. I don't think Future Group should be doing this. That is why, if you read what's happening and analyze what's actually happening, it is Future Group says that the dispute should be tested in Indian laws, or as per Indian laws. Correct? And Amazon says, okay, the Singapore arbitrator should resolve the dispute. You see what's happening?
So why they are taking it to that level?
Whenever you so one of the clauses in any term sheet or a shareholders agreement is the arbitration clause. In case of a dispute, where will you go for arbitration? Arbitration क्या होता है? Mutual agreement, mutual settlement, code driven. Okay, now most of them prefer Singapore because it is quick and it is efficient, but it is a little expensive. But it is quick and efficient. Okay.
Okay.
But some but it is but some guys might say no. I think we will choose our own jurisdiction of arbitration, and that's what Future Group is saying. The dispute should be tested as per Indian laws. Correct? You see what's happening between the two? Now, Future Group said, I'm in trouble. I need more capital. Okay, yes, I have Amazon. There are no private equity players to, buy out the size of Future Group because it's bleeding. Future Group in the past 3-4 years has divested a lot of assets like Central to Aditya Birla, and it has tried to consolidate, but still it's bleeding. Yes. Right? So in that desperate situation, in that sense, now as what is complicating the issue is that FDI norms, okay, do not foreign investments in multi-brand retail operations. Right? So Amazon technically cannot invest even if it wants to invest. Correct?
Okay, they cannot.
Even if they want to invest, because FDI norms for retail do not permit foreign investments in multi-brand retail. That's why Amazon took a stake in one of the subsidiaries of Future Retail, which is into the online space, the coupons business.
Okay.
You see what's happening? That's how complicated it can get. Now, Future Group says, boss, I'm not going to Singapore. I will test it as per Indian laws. And Indian laws say we cannot permit, which means Future Group has not violated the precedent transaction shareholding by selling it to Reliance or agreeing to sell to Reliance. You see, that is Future Group starts. And Reliance is sitting quiet. It's waiting. What does the Singapore arbitrator say? Which I think they should have something spelled out in this week, coming week, starting tomorrow. right?
What is the way ahead in these cases when the situation gets locked?
Well, if it's a lockdown, that's when competitive bids start. Each one will start outbidding the other. It may so happen, given the situation, that there could be tweaks in the FDI norms going forward. Okay, and that's how law is drafted. And then Amazon might push them and said, okay, I'm going to outbid Reliance and give you, or some part of the business will stay with Amazon, some part of the business will go to Reliance Industries. 4 possible scenarios from a deal closure perspective. Forget announcing anything.
Okay.
Sounds good?
Great.
Helps?
Great. Yeah, a lot.
Yeah. So I'm going to stop sharing the screen. I'll come back to the Word document. Don't worry. Okay. So guys, you realize what's happening? How different is deal announcement from actual deal closures? It's like a hell, like a torrid time for actually the bankers and the parties on both sides, right?
Rajiv,
Sorry. Yeah.
I have a question. Like, what's the time frame in which we could the deals get closed from scratch?
6 to 12 months typically.
Okay, so let's take a case we started, and then even in the 11th, or let's say half by the end of 12th month, we can say that okay, the deal cannot be closed. So 1 year hard work can go to
down the washed away. Absolutely.
Oh, okay.
Do you still want to pursue investment banking as a career?
Definitely, why not?
Okay.
Well, what Rajiv is trying to say, 80% of the time it's going to be like this way only.
No,
Yeah,
yes, it's exactly, and private markets is far more, is even more exciting, right?
you will always be going out with a heavy heart only. So
Yeah, exactly. This is like the dating game, the girl that you want desperately, it never happens. There's always some regulations, or the father doesn't permit. Fathers and mothers are regulators there, right? They write the law. And then there's competing bid. The girl wants to do something else. Oh crap! All my investments have gone down the drain, right? That's the analogy, real analogy in the transaction space. And then finally figure out, okay, fine, let's find another target now. Okay, this is not happening. You get this? So Amazon is like the third wheel, in a couple. You get this? In this transaction, it's like the third wheel between Reliance Industries and Future Group. It's like a stepney, but that's a heavy stepney, right? In terms of balance sheet strength. Okay, guys, are we all in? All on the same page? Getting clarity?
Yep.
Yeah. Okay, cool. Should we move on to the next way to look at? Okay. Now, okay. So the fourth thing you should be looking at, okay, in a deal is what is the transaction value. Okay. Here, look at the monies paid. Okay, is there any contingent payments? Okay, is there a breakage fee? There's a breakage fee. Okay, and is it like a straight jacket or a milestone? Straight jacket means 100% of the total transaction value paid right away. Milestone means if operationally and financially the target company achieves the milestones, okay, pro rata payment happens. Sounds good? So far so good?
Sir,
Yeah.
just put one word for contingent payment and breakage fee also.
Yeah. I'll do that. Okay, I'll come to contingent payment breakage fee a little later, but is the straitjacket milestone clear? So when you look at transaction value, and Indian journalism is so pathetic. They keep reporting so many lakh crores, so many thousand crores. They cannot simply state these many millions, these many billions. It's always confusing, right? Lakh crores, thousand crores. At least I'm confused all the time. Most of them I have to sit and convert. Okay, what is this lakh crore means? How many millions is it? Okay, so when you look at this lakh crores, whatever million billion transaction, right? Ask yourself, okay, what are the monies being paid? What is it, a straitjacket deal? Is it a milestone deal? Okay, is there a breakage fee? Breakage fee means, okay, if the seller or the buyer, okay, do not honor the term sheet. Okay, and I'm going to use the word binding term sheet. Okay, then a percentage of the agreed upon transaction value is paid as the breakage fee. Sounds good? Clear on the breakage fee? So if you see, because it's very easy to walk away from a deal after doing all the due diligence and say, okay, I'm not going to do away with the deal. There has to be a risk management mechanism on both sides. So if either the seller or the promoter says, after signing the binding term sheet means you cannot go back on the terms. You cannot not do the deal. You have to do the deal. Okay. Then a percentage of the agreed upon transaction. So the transaction value is 23,000 lakh crores. Okay, in Indian terms, whatever that means. In simple terms, if it's $24 billion. Okay, say 0.5% of the or 1% of the $1 billion the transaction value is paid by the defaulter to the other party. So if the buyer defaults, the buyer pays the seller. If the seller walks away from the deal, the seller pays the buyer. Okay, jokingly, we call this the prenuptial alimony. Okay, you get this? Cool. Breakage fee is clear. Any questions on the breakage fee? Hello, guys. Is everyone here? Is everyone there?
Yeah.
Yes, sir.
Yep.
Okay. So no questions on breakage fee, right? Now contingent payments is to basically risk management mechanism. Okay, to offset any possible off balance sheet liabilities of the target company. So very typical in pharma, very typical in IT, very typical in manufacturing as well. Okay, if there is a contingent liability, okay, all of us know what a contingent liability is, right? Can someone recap what can someone describe what a contingent liability is? Saurabh, can you talk about it?
Contingent liability, if you go by the bookish language, it's something which is contingent upon future. We are not sure about it, but it's contingent upon future. So we say that if certain events happen, then we had to do these things, and if it doesn't happen, then we are good to go.
Yeah.
So it's more to It's more towards the negative part of the business, like contingency. We are not
Correct.
sure it will happen, but if it has to happen, then okay, we create
Correct.
provision and all in accounting for that.
Correct. So you're right. So this is like your lawsuits in pharmaceutical companies on patent wars, right? Patent disputes, intellectual property disputes. In case the lawsuit, is against you and the verdict is against you in that lawsuit, you'll have to make good the payment. That's contingent liability. So during a transaction, you always ask, is there a contingent liability? Because if there's a contingent payment, the potential transaction value will increase, right? Cool. Any questions on that? How you look at transaction value? Yep. Yes. No. Like,
Sir,
Kritika. Yes.
sir, can you explain the milestone again?
Milestones. Okay. So
Yeah, sir.
milestones. Let's say, for example, you've agreed to acquire a company at say 100 crores. Okay, but on the condition that the target company should achieve a revenue run rate of maybe say about 4 crores, okay, for 3 months continuously, okay, and it should have say a gross profit of about 40% plus, and it should have probably established or maybe one second. It would have sort of maybe retail footprint by 15%. If these happen, I will make the milestone payment. Right? So if these milestones are not met, the 100 crores is not released. Only part of it is released. Sounds good, Chatika?
Yes, sir. Thank you, sir.
Okay.
Yes, sir. Thank you, sir.
Perfect. Okay. Awesome. So guys, I was thinking, let's take a break and let's resume after maybe a quick 15-minute break. Is that okay?
Yes, sir.
Yeah.
Yeah, we can have a Sunday lunch break. I'll also enjoy my little heavy Sunday lunch. You guys enjoy as well, and we'll resume at about 1:45. But let's close the lunch. We have announced the lunch. We'll close the lunch. Okay, and we'll resume at 1:45.
Okay,
Yeah.
sir.
Yep.
Cool. All right. See you soon. Okay, guys, I'm back. Let me know if everyone's back so we can resume.
I'm back.
Okay, cool. Let's wait. Let's wait.
Yep. Rajiv, you stay in Mumbai, so where exactly in Mumbai?
One sec. Sorry, I missed the question. Kaushik, what is it? Sorry.
Yeah. Yeah, so I said you stay in Mumbai, so where exactly in Mumbai?
I stay near Nandani. Gardens, yeah.
Near where?
Here Nandani Gardens.
Oh, Hilandani, yep.
Yes.
Thana or Powai?
No, Thane.
Thane, oh.
Yes. How about you? Where do you stay?
I stay in Kalyan. Kalyan, yeah. Yep.
Cool.
Rajiv, I had a question.
Anna, yes. Khushbu, okay. Khushbu was then Anna. Okay.
Okay, so it is just a generic question. So I was watching Bad Boy Billionaires that day, and so all those scams will be categorized into corporate banking. The
Correct.
Kingfisher one, okay.
Nirav Modi.
The Nirav Modi, yeah.
Sahara will be microfinance. Will be microfinance kind of a scam.
Okay.
Yeah.
Great.
Yeah. Anna, yes. Your question?
Yeah, just a quick general question about these M&A deals. So, which are the parties that are involved? Like you mentioned, promoters would be there. There would be an investment bank. So, what all parties are involved in such kind of a deal?
Okay. What I'll do is I'll capture that on the Word doc. Is that okay?
Yeah, yeah, sure.
Because I'll explain what a deal team looks like. Okay, so it'll be benefit everyone. Okay.
Sir?
हाँ, पुरुषोत्तम, yes.
या जनरल क्वेश्चन था, बाय साइड और सेल साइड दोनों जगह प्रोसेस सेम ही होता है?
नहीं, थोड़ा सा अलग होता है. I'll explain that. It's coming up. I'll explain that.
Okay, sir.
ठीक है, deal team and buy side sell side. I'll explain that. ठीक है. I think both these are a little specific questions. Like Anna, your question, and Purushottam, your question. Okay, they are not general questions. Yeah. Good. Otherwise, how do you manage this Sunday lunch?
Sir, I have a question.
Mudit, yeah.
So you were mentioning pro-rate payments. So can you explain, sir?
Sorry?
Pro-rate payments, sir.
Pro rata payment. Okay.
Yes.
I'll explain. Okay, hang on for 2 minutes. So yeah, that's again a specific question, and I'll answer that.
Rajiv, I guess you were asking something and your voice got disturbed in between.
Yeah, my question is, how does one manage like a 15-minute Sunday lunch? Typically, when there are no sessions, I have like a long, easy lunch.
For me, I haven't had my lunch because we had a heavy brunch, so the lunch will be after the class.
Oh wow. Yes, Sunday lunches.
Because Sundays are the only days when you can, wake up around 9:30, relaxed.
Correct. Then you have your afternoons spent here.
Yeah, like it's from last 2 weeks that it's happening. Rest, so I'm all relaxed on Sundays. I'll watch something or I'll read something like that.
Yeah.
Do you do investments like in stocks and all?
No, actually, I just have a mutual fund. Okay, sorry, I didn't know if this question was to Rajiv or me. I'm sorry, Prashant.
That was for you actually. Yeah.
So now I have just invested a very small amount in mutual funds, that too through a broker. I want to do the shares thing, but I don't have that much of knowledge. So hopefully after some more classes, I'll be able to get clarity and I'll start doing that.
And Rajesh sir, what about you?
Yeah, I do make investments in stocks. Yeah. I like anything that moves, right?
I have some different question, and that is, this course will help in FP&A profile work.
Sushanto, FP&A, not as much. Sushanto, not as much. It'll be largely around credit, equities, M&A. Yes, around those.
No, this is like investment banking course, but after that the entire course will help in FP&A profile. Entire
FP&A.
course.
No, that's what I'm saying. No, the entire course, because FP&A is not really covered in that course.
I think FP&A is also including all modeling and forecasting, budgeting work.
Yeah, FP&A also includes forecasting and modeling, but the financial modeling for FP&A is different than that for a transaction, then that for a credit. Okay, so everything needs financial modeling, but the format, the structure is different.
Okay, what is difference exactly? Just want to know.
Difference is
for my knowledge.
FP&A, you will forecast it basis, your management outlook, right? Detailed management outlook is more on your cash receivables, cash payables, your credit cycles, your debt maturity schedules from a manager's perspective at a corporate, correct? Versus the transaction modeling is more around valuation based, more on different scenarios of valuation. So forecasting is accordingly adjusted. It will look after if you acquire, how will you acquire, what is the best way to acquire, and how will that have a bearing on the break even of that transaction. So it's very transaction centric, versus FP&A is very corporate finance centric. Does that help?
Yeah, help, but the all when I've seen your syllabus, that all kind of things like forecasting, budgeting, and valuation, that kind of syllabus included in this course. So that's why I just want to know that is it helpful for FPN profile?
FP&A, that's what I'm saying, right? I mean, the forecasting techniques are different for FP&A than that for transaction banking, right? Or for a transaction. Yes, but of course, you can build on once you know how to work on Excel modeling and build any model. You should be able to build any model, be it for FP&A or be it for a transaction. Right?
Okay. It means this course will help only investor banker or any other?
Credit analyst, equity analyst, investment banking. Largely these three.
Okay.
Okay, let's resume. Okay, I hope everyone's back. Okay. So the first question, I think I'm going to address is the milestone based pro rata question, right? How's that made? Okay, deal team Anna, hold on. I'll answer in a while. Hold on. Let me finish the milestone base. So milestone base means, if for example, there is like a, out of the 100 crores, you say I'm going to pay about 60 crores right away. Okay. And 40 crores is milestone based. What this means is, you will break this down and you say the milestone based payment you will make over the next 4 years, 10 crores each year. Okay, so for every year you will have to set milestones. Okay, milestones based on revenue run rate, okay, gross profits, footprint. It could be technology milestones. It could be any other milestone, regulatory milestones, just about any milestone. Right? Does that help? Yeah. It was Kaushik's question. Whose question was it? No. Mudit's question, right? Mudit, your question was it, right? On milestones?
Yes.
Yeah. Now do you have clarity?
I have a question on pro data payment, sir.
Which payment?
So pro rate payments. You mentioned pro rate payments, sir, in milestone. Yeah, pro data payments, sir.
So this is pro rata, right? If you achieve the milestone for year 1 to year 4, whatever revenue you clock, right? Accordingly, the 10 crores will be released. You understand the transaction? 60 crores is paid upfront, 40 crores is milestone basis. Okay, now that you say 40 crores, you will pay over the next 4 years, 10 crores per year. Which means if I have to give you 10 crore in this year, you will have to achieve a revenue run rate of certain X, whatever that 4 crores. And instead of 4 crores, you achieve only 2 crores of run rate, 2 crores of revenue run rate, you pay half the amount. Let's pro rata on that. Does that help?
Sir, yes. It's clear, sir.
Okay. So you will have to work on what kind of milestones. Okay, fine. That's how you understand the transaction. Next time you read, hear about any of the M&A transactions, first ask, announce hua hai, great. Close hua kya? More important. Okay, what is the terms of the SHA? What kind of transaction it is? Who's buying? Is the buyer only buying asset? Is it only a business buyout? Is it a company buyout? Is it a brand buyout? What is it? Okay. Precedent transaction SHA you will largely not have access to. Okay, will largely not have, you won't have access to this. No public access to this. You will need to get into databases and your networks. You of course have a transaction value to it. They will announce 24,000 lakh crores, whatever, 24 billion, 30 billion, 100 million, 4 million, 10 million, whatever the transaction value is, and how is it being paid? Have the monies been paid? Are there any contingent liabilities? Is there a breakage fee? Is there a straight jacket or a milestone? Okay, how is it being paid? And then you will also look at the mode of payment. Is it a all cash deal, or all stock deal, or a cash plus stock deal? Okay, that's how you analyze the transaction. Okay, next, what is the voting rights and control premium? what happens here in this case is point number 6. Say even if Future Group will sell 100% of the company, and if it closes, okay, but still the Biani family may retain certain voting rights on certain critical elements of the retail business. That's called a control or a control vote, controlling voting rights or a control premium, using different terms, right? But that's what voting rights control premium mean. Okay, so I'm actually breaking down an M&A transaction for you at a very generic landscape level. I'm still at a 40,000 feet. I'm not getting into the grassroots of an M&A transaction. At a 40,000 feet, you still have to look at these things. Sounds good? Any questions on the M&A side of it?
Sir, do you have any typical case which you would like us to go through for, we can just have a glance. या कोई case आप हमें suggest कर दें?
Okay. So actually there's a good book. Okay. Deals from Hell. Sounds an interesting title, right? Yeah. Read that book. I'm actually buy it from Amazon. It's worth the space in your home library. Okay. Amazing account of deals that have failed. Okay, it has about 12, 14 transactions, I think, across the globe, and large big bang ones, AOL, Time Warner, and the likes. Okay, and it's like one of those timeless manuals on understanding why M&A transactions fail and how not to do an M&A transaction. More importantly, okay, deals from hell. Cool. Baki, I will run you through a transaction I was a part of. I mean, at a very, I will run you through the transaction just to give you a flavor of how to think about M&A at the end. Okay, the last maybe 20 minutes, 30 minutes or so. Sounds good? If you guys are up for that.
Yes.
Yeah. Yes.
Yes.
Okay, perfect. Okay, now Anna's question. Okay, there's something, her question to summarize for everyone else is, her question is, who all are parties to an M&A transaction? Okay, so it's called the deal team. The deal team, as it's called, includes, of course, the seller promoter. Okay, wait. Actually, let me simplify this further because it's complicated. One second. There is the I'll make it even simpler actually. Okay, there's a buy side and there's a sell side to a team. Okay? Buy side includes either the investor. The investor here could be a private equity investor. Okay, or the investor could be a corporate acquirer. Okay. Sell side is the corporate acquirer, also called as the buyer promoter. Sell side will, of course, very clearly include it could include an investor again, because a PE, okay, selling its stake in another corporate, okay, or it could be a corporate, okay, called the seller promoter. The corporate, I mean, the acquirer could be a government, it could be an investor, could be it could be government-owned company, whatever the case is. Okay, sounds good. Sometimes in specific cases, the sell side could also be employee block. Employee block means there's a large employee stock option, and the ESOPs need to be monetized. and there are certain specific investors who only want to buy the employee block, and employees want to liquidate their employee stock options. Okay, sounds good. So far so good. Then there is a deal team. Deal team basically structures the deal. Okay, deal team will negotiate, close, and will that's it. Okay, I want to complete it. They will structure the deal. Structure means what? In terms of the SHA, transaction value. They will look at the precedent transaction SHA also. Accordingly, they'll structure this. Whether is there any contingent, breakage, straight jacket, milestone, or whatever. What kind of mode of payment will have? Should it have voting rights, control premium for the buyers, the seller, promoter, buyers, promoter, all of it? Okay, and they will work with the regulators to file whatever relevant regulators, whether it's public markets or private markets. Okay, the deal team, even before structuring, which is obvious, they will actually do a investor buyer search as well. Okay, that's what they do. Now, a deal team includes the analyst, associate from both sides. Okay, it will of course you include the managing director of the investment firm. This is on the buy side and the sell side both. Okay, deal team also includes the lawyers, CS, and the company secretary only for regulatory purposes. Okay, only for regulatory purposes. That's what a deal team consists of. Okay, sounds good. Does that help?
Rajiv?
Yeah.
I wanted to ask you, in e-shops, employees are given option that they can buy the share at a price lesser than what will be the market price. So when an sell-side investor buys that e-shops, so they'll buy it at a price quoted to the employees, right?
No.
Not at the market price, right?
No. Saurabh, go back to our previous conversation before lunch. About large 80-85% of the time, we will deal with private market deals. So, okay, and if you monitor the private market deals, public market deals are very easy to do. It's not the other way around. Public market, listed market, way too easy and simple than the private market. So if you understand and crack how a private market deal happens, and I'm giving you the dope on private markets.
Okay.
Private market they वहाँ पे कोई listed price कुछ नहीं होता है. Yeah.
Okay. Fine. Yeah. Thank you.
Okay. So all your restructuring, turnarounds, M&A is all about 80-90% private markets. It's not the listed space. Cool. Sounds good. Any more questions on M&A?
Sir, if you are having any case study of any company or something, you can share it with us.
Diksha, what I'll do is I'll walk you through a deal today, and over the week I'll figure out what of which deals can I share with you in what form. Okay, does that work?
Okay.
Cool. Okay, done. Any other questions on M&A? Good landscape until now?
Yes.
Cool. So now we know deals announced hua. So yes, make money on stocks, but that's not necessarily good on both sides. Private markets, no one cares what stock prices are. Okay, because you literally run the company. Okay, you're not a marginal investor. Okay, now let's continue to the other parts. Okay, so I think we've covered all of this, the guiding principles, all of this we've covered, top line, bottom line, all of this is simple. Vehicles of growth, I think we looked at it already. Okay, organic, inorganic. Okay, sell side, buy side. I think, this was Purushottam, your question, right?
Yes, sir.
Yeah. So in short, very simple, no jargon. Buy side means anyone who's buying the asset is the investor. Anyone on the investor side representing the investor is the buy side. Okay. Sell side is anyone who is either brokering the deal or is selling the security. Okay. So of course, buy side is far more challenging than sell side. Cool. Pushottam, clear on that?
Yeah, sir.
Hmm?
Yes.
Okay. All right.
Thank you.
Okay. Now this is typically a life cycle of a company, right? From startup to transformation. So whatever you call it, right? But yeah, we can skip that. 1 + 1 = 3. Yes, this is once I run you through. Yeah.
Rajiv, can you just click hide button on this this tab?
Oh, okay. Is it better now?
You can just put a hide button. I think that will it will hide. If you want to again put it back, it will come back. Yeah, thank you.
Done. Okay. Cool. So 1 + 1 = 3. Yeah, it's good to talk about it, but I think it'll be clearer once I run you through the case. Hold on. That's M&A, mergers and acquisitions. Okay, that's more on the accounting side, but there's nothing really significantly different. Okay, so that's the different types of M&A. Horizontal is when you acquire a competitor. Vertical is when you acquire a value chain. Okay, so in your value chain. Okay, say if you acquire a supplier of your own raw material, that's a vertical value chain. If you acquire a distributor of your own product, that's again a vertical acquisitions. And conglomerate, like for example, Aditya Birla Group, Tata's. Okay, they get into diversified businesses across different sectors and different geographies. Okay, we can skip this. Value chain is nothing but the journey from a raw material to the finished product. And it's very important to know the value chain of the product you're tracking, especially in investment banking, because you need to know, how will you add value? How will you make more money for the acquirer or for the seller? So, as I said, understanding products is a hard skill. That's a skill set needed. That's why I chose you. I'm nudging you to choose one industry that you should go very deep into. Okay. Awesome. Let's go. Yeah, we'll discuss all of this. Okay, different ways to arrive at the transaction value. I think when we cover M&A and when we do valuations, I will touch upon this again. Don't worry. Control premia, I just spoke to you about, right? All right, control premia, voting rights, substantial premium. Okay. Yeah, I think this keeps changing, so no point discussing this. This is okay. When you read Deals from Hell, you'll have a lot of understanding on why M&A deal does not work. Okay, let's talk about Tata Chorus since it's here. And so I never knew it was covered here, to be honest. Okay, so I was at Citibank when the Tata Chorus deal happened, and we happened to be one of the advisors to the deal, Citi, right? And let me ask you, why did Tata buy Chorus? What do you think is the deal rationale? Okay, which brings me to the other part. Okay, let me go to the Word doc. Yes, you need to also know something called the deal rationale, which means why has the deal, or rather, I'll put it in simple terms. What is the business logic of it? Okay. This could be costs, it could be geo expansion, it could be product expansion, it could be access to technology, it could be bypassing regulations, okay, largely in the pharma space, okay, especially Japan. When you acquire companies in Japan, you want to set up Japan, okay, bypassing regulations, okay, via market entry. You don't set up a pharma company in Japan. You don't set up subsidiaries. You just buy a Japanese pharma company, right? So you bypass regulations via market entry. Okay. It could be raw materials, specialized, okay, special raw materials or specific raw materials, okay, or it could be distribution, or it could be, in some sense, legacy. Okay, so you have to ask the question: why is this deal happening? What is the deal rationale behind it? Okay, trust me, in your interview at the IB, you will be asked what industry you trap. Okay, great. Walk me through a deal. Walk me through the deal rationale, and that in one of the deals in the industry, you will have to talk about all these things. You should be knowing about all of these things. Okay, that's why I said, did I tell you to subscribe to VC Circle?
Sorry?
Did I ask you to subscribe to VC Circle?
No, it wasn't mentioned yesterday.
Okay. So, okay, one second. Let me stop sharing. I'll share. Okay. Okay. Right, guys. So VC Circle, please do subscribe. It's a very good, repository of deals that happen, and also subscribe to VC Edge. VC Edge will give you a lot of. I think no, you have to log in through this. Okay, it'll give you access to all the deals announced, deals cancelled, deals closed, okay, and deals called off. So it's the cost-effective way. It's a cost-effective alternative to merger markets. Okay, so please do subscribe to VC Edge. It's not expensive. It's some $5,000 per year or something like that. Okay, and also VC Circle is what you should be reading every day. It covers M&A deals. Okay, it covers venture capital deals. Okay, like you should be able to ask. I know people are tracking FIG. Okay, Axis Bank. Why is Axis Bank tweaking the pact to acquire Max Life? Okay, what's happening there? Okay, all these things. Okay, why is Huntsman selling out? Araldite to Pidilite. What's happening? And it's a $284 million deals. Okay, so read in your target industry. Okay, it's also about private equity. It also gives you access to a lot of interesting training seminars and a lot of interesting digital talks that happen. Right, so please do subscribe. And for people who want to understand TMT, there's another interesting portal you should read apart from voice and data. It's called Tech Circle. It covers anything and everything around different technologies. SMAC, social media analytics and cloud computing, blockchain, 3D printing, AI, IoT, security, everything. Yep. Sounds good. Does that help?
Yeah.
Okay. Do subscribe to both of these. Okay. Back to our other slide. Okay. So my question to you is, why do you think that, since I'm talking of deal rationale, right? I'm asking you the deal rationale of Tata Steel acquiring Chorus. What's your take? Now, this happened about in 2008, 8 and 9, 7, 8, 9. Okay, 3 years it took to close the deal. What do you think? What are the reasons? Or you can, yeah, please.
I think it's written there. Second point, Urus was an attempt to revive the ailing British steel. I haven't read anything regarding this.
Okay, you never read anything about this. Okay, okay. Tata Motors JLR. Can you discuss? Can you discuss that deal? Yep. Can we discuss that deal?
Yes, please.
Okay. So why do you think Tata Motors acquired JLR?
Well, what I have gone through, or a bit which I've remembered, that Ford was interested in selling the this brand belongs to Ford. Okay, I think right, and they were running short of funds, so they offered to sell off the Land Rover, Jaguar Land Rover. I don't remember the complete case. Tata was also wanted to get into the premium segment after acquiring this, though Mahindra also pitched in to buy Jaguar Land Rover.
Correct. Correct.
Something like this way. I think the story was something like this way.
Correct. 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 That's you're on the right track. It's a good start. Someone wants to help Nalin out on that. Come on, we hear about this so many times, right? Okay. Sorry. I heard a voice.
I think this deal came out in around the financial crisis. I'm not sure. I was very after the financial crisis happened, and that
That's
time
right.
I think so the JLR were suffering from their outdated what I can say models, and they were in a little bit of financial crisis. That time it got helped by Tata by seeing it, and Tata were also facing some patch in that time. There were segments were not that in luxury market, what Nilin said. So they did it, and yep, I know a little bit on that front only. And it was
Okay.
around 2.3 billion deal, I think. See,
Yeah, it was like the total transaction value was 4 billion actually. Okay. So deal rationale, guys. I want you to think on these lines. Cost, geo expansion. Was it for product expansion? Was it for access to technology? Was it to bypass regulation, special raw material, legacy issues, distribution? What was it?
Legacy.
Okay. 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 What in legacy? I mean, these two are legacy brands, but what specific?
Jaguar Land Rover was a legacy brand of Ford.
Right.
Hello.
Yeah.
So
yeah.
That certainly made Ratan Tata think about buying it, and it's a two-way deal. Ford also wanted to sell Jaguar Land Rover.
Okay, so let me give you the context, right? And when I walk you through the context, please observe, to what depth you should be knowing a certain industry. Okay, and that's how you have to be preparing yourself in your target industry. So here's the thing, Tata Motors, okay, had a checkered success in passenger vehicles, right? Apart from Indica, most of the other passenger vehicles did not meet or rise up to the expectations, right? Am I right? No other model.
Yes.
Correct. Now it wanted, but it had a very strong hold in the commercial vehicle space. It still does. Okay.
Yes.
So now Tata Motors wanted to get access to better technologies and also advanced technologies in the commercial vehicle space. And it wanted to get into the premium SUV space. The premium SUV space, okay, where it could use the same technology for SUVs to make advanced small trucks and mini trucks, and also use it in the larger trucks. So far, so good. Okay, so it was finding for a technology partner actually. Now, the best technology that was available in terms of a very robust, rugged SUV technologies is what was with Land Rover and Range Rovers. Okay, and Range Rover, Land Rover, and Jaguar together was owned by Ford Motors. It's not a Ford brand. These are British brands. I'm sure everyone knows about it. These are British brands that Ford acquired, okay, from the original British owners. Why? Because Ford, when it acquired and it overpaid when it bought JLR, and they bought it in excess of about uh, about 7 billion dollars, right? That's the price they paid, transaction value they paid to buy these. Why? Because Ford itself was struggling in their home market after that Taurus had failed. Taurus was a model, and they were struggling to keep up with the SUVs launched by Lexus and Toyota at that point in time, and Nissan. Okay, they were figuring out what to do. Okay, globally. So they had acquired this in the hope that they will turn it around, but they couldn't. And Ford was in a desperate situation to sell it out. And at the same time, Tata Motors was looking out for technology. And this is a great way to integrate and port technology and create synergies. And we'll create new products and expand into new markets with those new products based on the advanced technologies. That was the rationale. So when Tata Motors first approached Ford, they said, I only want to take Land Rover. I'm not interested in Jaguar. Okay. But Ford said, oh, if you have to buy everything together, all three, Land Rover, Range Rover, and Jaguar. Otherwise, we are not selling. Okay. And that's how they had to buy it. They had no interest in Jaguar. They had more interest in JLR and Land Rover. So they can port it to their truck business and get into premium SUV space. Okay, they bought it at about $2.5 billion, but then there was a contingent payment and all of it given to the unions, workers, British government, settlement. Everything came down to about $4.5 billion. Okay, that was the total transaction value. It was a straight jacket, not a milestone based. Okay, and that's when the company became a Tata Motors company. Going forward, they utilized and teleported the technology that that JLR had, okay, in terms of traction control, transmission, heavy duty chassis, okay, and roofing technologies to launch their Tata Nexon and the other new Tigor. All of these are based on the JLR platform. Okay, that's how it happened. Does that give you a little better understanding of the deal rationale?
Yes.
Yes.
Yeah. Nalin, does that make sense? You're from the automotive space.
Yes, that completely makes sense. Yeah.
Right? Miss out on anything. That's the primary rationale, right? Yeah. So guys, this is the you can better it for sure, but this is the way you talk about a deal rationale. Very detailed in terms of transaction strategy. What is the buyer's motive? What is the history of the buyer? Why is it trying to buy? What is the history of the seller? Why is it trying to sell? Okay, and the Ford sold it at a lower price than it acquired. It rarely happens, right? But this was a very peculiar situation. It happened. Okay, That's how you need to talk about deal rationale. Sounds good? Which means you can only be talking like this when you follow deals either on VC Circle or Merger Markets in depth, or you've done one deal. Trust me, if you've done one deal in any sector, right, close one deal, your learning curve is exponential, and that will make you learn about the industry so much. Okay, cool. Let's continue then from there on. So Tata Chorus, I think we'll talk about it sometime later. I spoke of Tata Motors. Okay. Okay. That's the deal rationale basically. Okay. Then we come to private equity, the other landscape, the other part of the jungle. Okay. So private equity is nothing but, okay, I'm going to bucket. Private equity, simple. Okay. Investing in the private markets. It could be equity, could be credit, could be structured finance. Okay. Could be real estate. Okay. Could be real assets. So that's private equity. So wherever there's a private market, unlisted, private markets is unlisted, you either invest in the equity, the share ownership of that company, or credit, giving out loans to private unlisted companies, or a structured finance which is convertible, or private real estate or real assets in, like, for example, a cacao bean in Ghana, okay, or a cacao bean in Ivory Coast, or a timber coast in Botswana, okay, those kind of real assets, or maybe rubber plantation in Malaysia, okay, olive plantation in Morocco. Okay, this is private equity. This is a range of private equity transactions. Okay, there are different kinds. Again, private equity is based as per industry groups. Okay, private equity is based as per geographic focus. Okay, and they're focused based on the transaction value, which means there could be a lower mid market, it could be a mid market. Okay, there could be the large cap, as it's called, sorry, large caps, and there are buyout firms. Okay, so buyout firms acquire the whole company. Large caps will take controlling premium, and mid market will be maybe middle market, as your SME space. Lower mid market is your MSME space. Okay, so private equity is money plus strategy, which means they give managerial talent. Okay, they will give access to portfolio companies of the PE fund. Access for what? Tech, customers, vendors, and the likes. Okay, general and administrative. Okay, so private equity is basically very activist kind of investments. You take board control, okay, and you co-run the company. That's private equity. Very different. Specialized type of private equity I would include here is it's called pipes. Okay, these pipes are nothing but private investments. Private investments in public entities. It's called a pipes. Okay, so there are also, they make investment in public entities, but they take large stakes. Okay, this is very specialized, and this is the first step in taking the company private. When a pipes happens, it means high possibility this company will go private, which means it will move from the listed space to the unlisted space. Okay, sounds good. Better focus on the business model, okay, rather than being bothered about stock prices. So when it's private, you're focusing more on the business model, okay, rather than constantly bothering about stock prices, investor conferences, earnings calls, and all of that. Okay, brokerage houses chasing you. So it's quite it's quite a different world out there. Okay, so those are the 7 characteristics of a private equity fund. Large PE funds include, sorry, like for example, Warburg Pincus. Okay, you have Blackstone, you have KKR, you have Actis. Okay, all right. You have Oaktree has a PE fund. Okay, GS has a PE fund. Okay, and the likes. Okay, of course, like Texas Pacific Group, General Atlantic. Okay, Temasek and the likes. Sounds good. That's private equity. Any questions on PE? So your next logical steps after working about 4-5 years at investment bank, you should transition into the PE side. PE side is the buy side. Okay, and you could be a buy side investment bank, only focusing on buy side transactions, only advising PE funds, hedge funds to invest. Okay, now PE funds, what is the fund structure? Okay, it's the same. You will have, you remember the carry or the performance fee, and there will be a annual management fee. Remember that carry and the annual fee, very similar to 220, 330. Yeah. Similar structure. All right. Again, it has the LPGP structure, as we'll see ahead. Okay, the limited partners and managed by general partners. Okay, as we just said, right? Buyouts, VC, and all of it. Sources of capital, insurance, large company, HNWIs. Okay, that's a typical structure there. There's the limited partners who pull in the money. There's a general partner here, the advisory firm. They will invest in the company here, the fund. They make multiple investments, and then the money goes back. Okay, I think we discussed this yesterday. Very similar to hedge fund.
Raju, what can you just explain about the pension fund? Because I know the pension, we know it all together, but how it's going in private equity as a multiple source.
So pension funds are investors in PE funds, because pension funds will collect a lot of pension contribution, the employee pension contribution, right? Yes. And there'll be a pension plan, defined benefit plan, okay, employer side, employee side, and but they're only payable after a long time, say after 10 years minimum, right?
Yeah. Yes.
So they have to park their monies to earn a return. They have a large float. So one of the ways one of the asset classes they prefer is a private equity fund, because the PE fund will have a life of 4 years plus 2 years extension, right? In the hope that they can churn out the capital and earn some returns, the spread. Okay, that's how they come in terms of the PE landscape. Okay. Yep. Sounds good.
Yeah.
Okay. Okay, that's the different stages we discussed at the hedge funds and all of it. Okay, venture cap we've been discussing. That's where, right? Our yesterday's case study on legality. Okay, it's one of the categories of private equity. Okay, That's the private equity market. That's how it looks. Largely, they are intermediaries. Okay. Okay. This could all they different sources of capital basically, and different ways to deploy capital. Okay. Yes, there are different ways to do it. The managers, the success of the investment. Okay. The macro environment, investors. We discussed this last time. Any questions? Happy to take. Okay. Yeah, I think all of this is there, but when we discuss a little deeper, we'll figure that out. I mean, I disagree with this slide, these two slides. It practically doesn't happen like this. This is very theoretical, but it practically doesn't happen like this. I'll tell you when we do the valuations part. Okay. Because this is all, you can manipulate all these numbers. You can manipulate the net income. If you manipulate the net income basis of accounting standards, you can manipulate the ROE. Okay, equity again itself is a notional, right? It's not an actual liquidated value. So there's a lot of ambiguity to this DuPont ratio. Looks very interesting academically, but practically not much of relevance. Okay, what is of relevance is basically the entry multiple and the exit multiple, which means the valuation means the price paid, okay, at which a fund invests, okay, and an exit multiple basically is a valuation, which means price, you extract the price, right, at which fund either liquidates the investment. That's all it matters. And both these multiples focus on precedent transaction multiple. Remember, I gave yesterday we were discussing how large can this company get. Remember that conversation? Right? So the exit multiple is how the valuation is determined, not the ROE types. Okay. All right. Yeah, we discussed venture cap yesterday with the live pitch deck. These are all dated ones, 99 and 2000. We discussed 2019 wala pitch deck. Okay. So yeah, the complete buyouts. Okay. So as a financial model, yeah, Carlyle is another private equity fund, very very prominent private equity fund. Okay. So all these are again, we'll do when we do valuations and financial modeling. We will look at these in detail. Okay, don't worry about it right now. Then there are listers and special situations. Okay, this is where one second, your restructuring and turnarounds happen. Okay. This is your group. So I'll add names like Wilbur Ross, Carl Icahn, and the types. Okay. They're distressed asset funds, completely distressed assets. Okay. Cool. Guys, any questions? Any questions? So far, so good.
Will we receive this PDF?
This is there on the
LMS.
Yeah, it's there on the LMS.
Okay.
Right? So you should go through it and let me know. Ask me any questions, right? We've covered most of it. Right? Yeah, what does a P analyst do? It's very similar to an investment bank. Okay. Very important to understand the industry in detail. Same thing, all hard skills, soft skills, everything ties in here. Okay. This is what I meant by entry multiple and exit multiple. Okay. Yeah. I want to see what else is there. Equity research, I think it's basically, yeah. Okay, here's the thing. I think just focus on this for a while. Right? So again, the buy side will be, some on an equity research side will be someone who is a mutual fund manager or an insurance, company who's buying large stakes like an LIC or the likes. Okay. It could also be wealth managers for HNIs, and sell side are brokerage houses, your distribution companies like a Motilal or an Anand Rathi or an ICICI Direct and the likes. Okay, very simple. Whoever sells is a sell side. Whoever's sitting on the money to buy, they're the buy side. Okay.
Trade desk, buy side trader, वो क्या है sir?
Huh? So there'll be a trade. You'll have to trade. So once you decide you want to buy Reliance Industries, you'll have to go to the trading desk, right? You can have your own terminal, or you can call up the phone or whatever, right? Your own thing. Yeah. Right. So that's typically what an equity research team looks like. It's very rewarding. Equity research again is very rewarding, and again, equity research is, it's structured as per industry groups, very similar to investment banking, right? So yeah, it's fun. It's fun. Even this role is fun. You should actually, I would urge all of you to start probably transitioning here first, or in boutique investment banking first, and then transition to private equity. It'll be fun. Then it's doable. This is doable. I'm not saying it's not doable. It's doable. Okay. Okay. So here, once you understand the fundamental technical and the fundamental analyst and the technical analyst largely focuses on the stock prices and trades more often. A fundamental equity research analyst will focus more on the fundamentals of the company. Okay, and look a little longer term horizons. Okay. So it's good. It's good. Like, I mean, we've discussed all of this, right? So yeah, see, the emphasis on writing skills is very important. Okay. Yeah, that's it. That's it about as far as this deck goes. So we've covered everything. The only thing is I want to walk you through an actual deal. What's BCG, Saurabh? Sorry. Boston Consulting.
No, I was asking whether they are into private equities as well, right? BCG.
They are advisors to PE funds. So the MBB thing, McKinsey, Boston, Bain, they have a private equity advisory arm, and they advise private equity funds, okay, to make investments.
Okay.
but they are far more, they operate differently than investment banks because they focus more on also what to do after acquisition. Okay, and let me also give you another clarity. Okay, is investments actually start sorry, let me put the other way around, right? Work actually starts after investing. Very important to know. That's where Boston, McKinsey, they come in very, very handy, and not an investment bank. So you should look at working at either at a consulting firm, strategy consulting firm like those, or boutique consulting firms, or boutique IB firms, or equity research. Right? Sounds good.
Yeah, thank you.
Cool. So any questions for now? Because now I want to actually run you through a condensed version of a deal I was working on. Okay. Anyone? Good, helpful, so far so good. More clarity, everyone.
Sir?
Purushottam, yeah.
Yeah, you were saying to work first on boutique investment banks, right?
You should, yeah. That's so there are multiple ways now, you realize, right? Boutique banks for sure.
As a beginner, from where should I start? Like it's a little confusing.
So ऐसा है पुरुषोत्तम, at least start preparing on the skill sets and you know, look up. Did you look up these companies, MAPE and all?
Yeah.
MAPE, O3, Singy Advisors. I keep giving you these boutique IB names next session onwards whenever we meet, and I'll walk you through the career page, and I'll also give you the connects who you should start speaking to right now. Start building your networks right now. Okay, don't depend on someone. Don't wait for something.
Yeah.
Okay, but that initial call to happen, at least start building your skill sets. Start reading up, pick an industry, pick a transaction now. Now you know how to talk about a transaction, what to look into a transaction, right? It's just not what the media says, right?
Yeah, got it.
It shouldn't be an Arnab Goswami conversation. You know what I'm meaning, right?
Yeah.
Yeah.
Thank you.
Wo start karo. The next session onwards, I'll start doing this for each one of you. Okay. Okay. Any questions until now? Good. In line with your clarity or expected. You know the landscape now, skill set wise, different players wise, career options wise. What's to be done more importantly, and how it's to be done, right?
Yeah, there is I need a bit more clarity on how it has to be done. Like I wanted to ask what Purushottam asked, but yeah, it's somewhere around that. How do we start? Yeah.
So sort of how, see, you will have to develop hard skills, soft skills. Do you agree on that?
Yeah, definitely, yes.
Okay. उसमें से industry knowledge, I've already given you how to do.
Yeah, correct.
All these links. So now it's upon you. Start reading, start asking me questions, start discussing it. The more you do so, the more you'll understand that industry. Correct? So industry part is covered there. What is remaining?
Yes.
Excel, financial modeling, and valuation. That let the sessions happen. We'll cover it. Those how to do it.
Yeah, yeah, correct, correct.
See, that's what I'm saying. Monday to Friday, अगर 2 घंटे नहीं दिए to read about your industry, nothing's going to happen. वो घूम फिर के you will ask me the same question at the end of 3 months. How to do it? Because this is not okay lunch. No, यहाँ सब spread करके रखा है. You serve yourself. ऐसा नहीं होने वाला. No one's going to feed you. But we'll tell you because ये सब चीज है.
Yeah, correct. Yeah, that's there. That is true.
Yeah, yeah, yeah. So 90% of the success will come on your own initiatives. These 4 hour classes only 10% of it. Trust me.
Yeah, it's really helpful to a proper guidance as to where to start. So this was really helpful. The websites and the insights had to read on the company websites. That was really helpful.
Very, very important. So how? That is the first how. At least start with that. Build a momentum there. And then the other how I'll give you. Excel class when we do. Financial modeling when we do. How to tackle valuations. How to tackle interviews. How to write CVs. It's coming up. But you already have a lot of work on your hand on the how part.
Yeah, that's.
And trust me, that is the most overwhelming part. Excel is not overwhelming. Valuation is not overwhelming. If you don't understand the industry, valuation करके कुछ मतलब नहीं है. Because you will not be able to, do what? You will not be able to talk about. I'll tell you what. Sorry. You will not be able to talk about the deal rationale. Correct?
Yeah,
Do you agree?
correct. Yeah.
तो अगर डील रैशनल कर ही नहीं पा रहे हो तो वैल्यूएशन इज गार्बेज इन गार्बेज आउट ना इट्स जस्ट फिलिंग द ब्लैंक्स ऑन द एक्सेल शीट दैट इज नॉट व्हाट आईबी इज डूइंग
Exactly.
Okay, so guys, what I suggest is let's take about 5 minutes or 10 minutes of break. Let's resume and I'll walk you through a situation. Sounds good?
Okay, sir.
Okay.
Okay, so we'll meet at about 3:05.
Cool.
Cool. All right. See you soon. Okay. All right, guys, I'm back. Is everyone in?
Yeah, sir.
Yes.
Yeah.
Yes.
Awesome. Awesome. Thank you. Okay. Okay. So let's walk. Let me first address, because there are a lot of questions on how. Okay. Let me quickly address that, and I'll then walk you through a few career portals. So you can start preparing as to what's needed, and then I'll walk you through the case. Okay. Sounds good in that order. So
Yes, sir.
okay. चलो. सबसे पहले how. How. Okay. Okay. So how? First question, first response to me will be read, delve deeper, okay, and build your perspective on the industry, okay, from a deal vantage point. So from a deal, how do you look at this? Second, pick up side hustles. So you can work essentially, take up a part-time, okay, or project basis deal work and get a fee, okay. And then you can figure out, decide, okay, how will this happen? Network, online events. There are a lot of events that happen online now, and offline events, okay. Events
So
as
where are
in,
you typing? We can't see where are you typing.
really?
Yes.
Your screen is freeze. Can you just check the network?
Let me check, hold on. Okay. Okay, is my screen visible now?
Is visible, but whatever you are typing, we can't see.
Okay, is my screen visible now?
No, sir.
No, sir.
Now.
No.
Okay, wait. Is it visible now?
No, sir.
No, sir.
Oh God, what's wrong? I can share the screen. Just check now. Not yet, even now?
No, sir.
No, sir.
You can log out and then log in.
Let me log out and log in.
Yes.
Okay, Karan, can you allow me to share? Hello? Yeah, am I audible?
Yes, yes, sir.
Yeah, audible.
Yes, sir,
Karan,
audible.
can you? Okay, Karan, can you allow me to share my screen? I have to call it. Just one second. Uh, Guys, they're sorting out some problems. Meanwhile, let's make it productive. Any questions? We can. I'm sure you have questions, so we can solve that. So I will just tell you how to do it. Right? Very simple. Uh, let's not waste time. Whenever it happens. So how? 3 steps, boss. Read, read. You got to deep dive. You got to delve deeper. Build your perspectives on the industry from a deal vantage point. That's the first thing, is the how. The second how is a side hustle. You know what a side hustle is, right? You take up some project basis on the side while you're still at a full-time job, okay, and get the feel. You will rough smoothen your lot of rough edges, okay, get a feel, get a heat, face the heat, see what it takes to build a model live, see what it takes to build a pitch deck live. So do that. How will you do this? Network, online events, offline events, meet people, do your web research, reach out to people, make those cold calls, and build your networks, because these things are not going to come to you on your desk. You have to reach out to people, you have to make yourself marketable. Okay, Pushottam, does that help you on how to do it, or sort of how to do it?
Yeah.
Simple. There's no rocket science to it. Because they go the banking firms out there won't have a epiphany. उनको सपना नहीं गिरेगा, अरे you need a job or you're looking to transition, right? You have to reach out. Networking skill sets. Okay, that's the how. Okay, I think now I can share my screen. All right, thank you. Okay, is my screen visible now? At least, please say a yes.
Yeah.
Yes.
Yes, sir.
Thank God. Oh God. Okay. Okay, so I've just captured the how.
Yeah.
Online, offline events, a lot of them happen around private equity. So look up, Indian Venture Capital Association. They have a lot of events. VC Circle, they do a lot of offline, online events. You get to meet people from your industry, right? Where you want to go, your target industry. All right. That's important. Sounds good. So don't depend on a headhunter to do this for you. You have to do this by yourself. Headhunter will only augment it. Okay, cool. Now let me walk you through a few, career portals. Like, you should, like Singi Advisors is one of them. Okay, see, they already have current openings, all of them in the M&A space. Okay, write to them, talk to them. Okay, best ways to cold call or write to them and write them an email, apply here, talk to them. You'll understand what all job descriptions are needed. Not everyone needs chartered accountancy, don't worry. Okay, you can talk, you will look at Veda Corp as well. Very interesting, investment bank. Talk to them again. There's a careers tab. Write to them, talk to them, see what's there. Look at what transactions they do. Okay, they're based in Bangalore and Chennai. Okay, look at Universal Consulting again. Okay, pick up the phone and talk. Okay, Equirus Capital is another interesting space to be in. They are an investment bank again. They continuously keep looking out for folks. Okay, see, very open. Okay, talk to them. It's open, already open. Right? So make that happen. Make that happen, guys. And your Maple Advisors, the other one. Maple and also Maple Advisory, both. But Maple is a new one, so you get a better thing. Actual will give you a good list of boutique investment banks. Okay, it's a good platform again to stay updated. Okay, my screen is visible, right?
Yeah, it's visible.
Yes, sir.
Cool. So you have a massive long list of investment banks in India. You can talk to them, meet them, talk to them. They are always approachable. Okay, but when you meet them, talk to them. Don't have a very generic, rough, unstructured conversation. Okay, be prepared. Talk to them about new ideas in the industry. What can be done? How you can help them. What is the relationship you bring to the table? Do you know any interesting founder? Do you know interesting startup? Do you know some interesting family business that you could introduce them to? For additional businesses. That's how and why they will recruit you. Remember 2 hard questions you have to always ask when you're meeting anyone. Okay. Your recruitment, HR, mumbo jumbo, everything gets summarized in these 2 questions. Yeah. So how will, if you're targeting O3 Capital or say Singi Advisors, how will you help them make more money? Or RRA Advisors, how will you make them more money? Or how will you help them save costs? That's it. You have to. All your responses should touch upon either of these 2, focus areas. Okay. Okay. Last part of the day. Live case on M&A so that you get a feel. Okay. Just one sec. Sorry. Okay. Okay, guys. So this is the last part of today and financial landscape. This is tech components, TK components. It's an actual company that is existing in Pune. Is my screen visible now?
Yeah, it's visible.
Sir. Yes, sir.
Okay,
It
but
will.
what happened? But what happened? Just got down. Just one second. Let me open the file again. Okay, can you see my screen? The PPT?
Yes.
Great. So this is an automotive deal, guys. I was involved in as a negotiator. I valued it and negotiated it, found the buyer, found the investor, sold it, okay, and in the process made some money, okay. So it was front end investment banking, automotive components. This company is called Tech. I want you to read all of this. I'm going to I'm going to stop speaking for a while, the next maybe 3-4 minutes. Absorb all that you can. Make notes from this particular slide, and then just tell me, then I'll proceed once you're done. Yep, sounds good. We get an idea of what it means. Okay, focus on the clients. Make notes. Focus on the clients. Okay, sounds good. What it does and the clients absorb the financials. Of course, I get this deal in 2010, so it's 10 years old, but he'll still give you a reference. Okay, 2011 we closed the deal. We started working on it, announced it in 2010, 2011 we closed it. Okay.
Rajiv, what does this RONW means?
Return on net worth.
Okay.
Okay. Some more financials for you.
हेलो
Yes.
सर आपकी आवाज नहीं आ रही है
Yes. Tell me. I'm not saying anything. I'm just allowing you to look at the numbers. Okay. So now, okay. Any questions until here? This slide. Do you understand what it does? Do you get a sense of what the clientele is, and do you get a sense of the financials? Any questions on that? Anyone? Any clarity needed? So we can move ahead in the case study.
Hello.
Yes.
Can you go on to the next slide? Next to this slide.
This one?
Next one. Yeah, in this, the first table, the capex in 2013 is substantially higher than our cash balance. Like the cash is way low than our capex if you go by the graph.
In 2013, the left side.
Yeah, the left side, the table on the left side, 2013. It's some.
Huh?
Can you please? What is that cash flow ROE? That is the free cash flow to the. Is that thing, right?
Cash flow, no. That is cash flow return on invested capital. That is not FCFE. FCFE is the actual cash. Okay. Yeah, it's a cash flow return on invested capital.
Yeah. Okay. And what's the capital structure here? Whom is this particular?
So it's all owned by the family.
Okay. Okay.
Good, Suraj. Okay. Anyone else? Any other questions on the company? Financials, clients, what it does. So I can open the next question for you.
Hi, Rajiv Nalin this side. Hello.
Nalin, yes.
Sir, this is new to me, so I think you need to explain me what exactly these graphs are.
Okay. Let's look at this graph. The blue is revenues. Okay, simple.
Yeah.
Green is return on net worth. Net worth is your retained earnings plus the equity. Okay, over time, actual tangible on the balance sheet, and what is your profitability on the net worth. Okay, sounds good.
Okay.
Black is EBITDA. I'm sure you know EBITDA, right?
Yeah.
Easy. Okay, so this is clear. Okay. This slide, the left side, the one in the blue is cash flow return on invested capital. So let's first understand invested capital. Invested capital is, so every year you will make some capital expenditure.
Yeah.
Invest in machinery, technology to expand. At the same time, your invested capital also includes working capital that you've invested in inventory or receivables.
Yes.
That's also working capital. So invested capital means your capex and opex, capex and working capital both. That's your actual monies at that you've deployed, right, during the year. Okay. Now, what is the cash flow returns? Not EBITDA, not net income, not operating profit, not gross profit, but how much cash are you generating on that invested capital? That is that number.
वो कैसे निकलता है? मतलब how just
you will compute cash flow from operations.
ठीक है.
Divide that by the invested capital.
अच्छा. Okay.
And that's the percentage there. Correct? Yeah.
Okay.
Okay. And capex is capex, capital expenditure. Simple. Left side graph is clear. So since ROIC is going from 4% to 60%, around that time, capex is more or less stagnant, except for 2013, right? Right side pay, it's your cash conversion cycle. How efficient is your working capital, right? Days of sales outstanding, the green graph, which means what is the average days until you receive monies from your customer on credit to who pays you. Okay.
It should be on the lower side, right?
It should be on the lower side, but here it's decreasing. No, from 173 days, it's expected to stabilize to 75 days.
So this is an improvement, right?
Correct. It's an improvement because customers are paying you sooner than before.
Yeah.
Okay. It may not be on time, but sooner than before.
Yeah. Yes, got it. Yeah.
Okay. And the blue graph is non-cash working capital. You will also have working capital in cash and non-cash as well, right? In terms of inventory, payables, receivables, that's non-cash. As a percentage of sales, how much is that? So how much of your fund? It's a fund flow metric. How much of your funds are blocked in working capital? Correct?
ठीक है.
समझ में आया? And this has to be as low again. The lower the better.
बिल्कुल. Yes. The lower the better.
ठीक है.
Okay. Thanks.
Cool. Okay. If anyone else, any other questions? No? Diksha, Anna, Swati, Meghna, no questions at all? Purushottam, Saurabh, all sorted? All you understand the business? I'm giving you yes. Yes, go for it.
No, I was seeing that, but this particular slide, that new program, didn't find anybody from the client side. It was blank, so I thought it's not appearing to me.
No, it's blank because it's a new project, right? It's not yet up.
Yeah. Okay, yeah.
Any other questions? Others? No? All sorted? Okay. Now should we move ahead? Now my next question is to everyone. Chalo, we understand this auto. So who can summarize what this company does? Let's first take that. Who can summarize what this company does?
Okay, this company is into the domain of they have a tool shop with one production line, and they are into electromechanical products which can be used in auto, electrical, and aerospace. It's a certified company, ISO 9001 and 16949/2002. They can design it CAD CAM. They have a precision tool making, and the customers are from auto industry, tier one like Yazaki, Delphi, then SKF, Tata Motors, Hero, Maruti Suzuki. So they are supplying connectors and sealed and unsealed both, which probably are used for the wiring business.
Right, that's right.
Raji,
Yes.
what is this CAD and CAM?
Computer design.
पहले वाले slide पे.
Yeah.
Computer aided design, computer aided machining.
Okay.
Okay. Sorry. I didn't get who asked that question. Who asked that question?
Yeah.
Saurabh. Okay. So I think Saurabh's question is important to everyone in the room. You see, to analyze companies, how important it is to understand how products are made, without which it is financial mumbo jumbo. It's only financial commentary. Do you understand that? Do you realize the importance of how products, the understanding of how products are made?
Yes.
And then translating that into a deal. Okay, otherwise it doesn't make sense, right? मतलब balance sheet में भी पढ़ के commentary दे दूँ, commentary देना है तो growth rate ही लिखना है तो, correct?
Yeah.
Okay, good. So now you know why your interview prep is not instant Maggie. It's a marination. Okay, it'll take time because each industry will have such terms. You'll have to go deep into it and understand what it means. Okay, chalo. So let me summarize the company. This company makes automotive components, largely connectors. Connectors is a wire harnessing for any electricals underneath your automotives. All of us drive cars, right? Or have sat in one. So any wiring that you see, it needs connectors and fuse boxes and terminal boxes. This is one of the largest players in India. As you see, they supply to OEM. What's in OEM?
Original equipment makers.
Original equipment manufacturers, right? The brand owners. So they supply to OEMs like Kaihin, Ford, Maruti Suzuki, Yazaki, Toyota, SKF. So, okay. And they also make customized components for aerospace, the aircraft electrical panels. They also make electrical connectors, wire connectors. Okay, they make bearing and housing and precision molded parts. Okay, who do they supply to? Airbus, aerospace company. Honeywell. OE is it's a telecom company in Brazil, and they do SIM cards for them, manufacture SIM cards for them. They also manufacture SIM cards for BSNL. Okay. Goodrich again is a aerospace component company. Tyco Electronics does a lot of things, okay, in telecom and aerospace and automotive and fire. Okay. Schneider, I think all of us would have heard about Schneider. Valeo is a French auto company, okay, auto company. I'll give you an example, right? Next time you board a flight, okay, and if that flight is an Airbus A319 or an A320 or an A321 or an A330 or an A340 or an A380, any of the Airbus line, ऊपर का जो regulator होता है ना, the air regulator, the air conditioner as it's called by the layman, that air regulator nozzle for the entire Airbus fleet is made by Tech. Okay, so you can relate to that product. Okay, so that's the kind of precision it is, it is into. It's precision engineering. You can't go wrong. It has to be precise measurement. Okay, and its precision engineering is its strength. Precision engineering comes from precision tool making. Okay, your tools have to be precise with very little tolerance level from design to manufacturing and design to tooling and design and tooling to manufacturing. And that's the strength. Very, very rare skill sets, very rare skill set at this kind of validation. Okay, when you validate with these kind of customers, it's a rare skill set in India. You'll find many such companies in Germany, Japan, Taiwan, Austria, Switzerland, Italy, Spain, but not in India. Very few. Okay, right? Nalin, am I right? I think you will echo this with the automotive space, right?
Yes.
Okay, so that's the strength of the company. Developing that strength, they're also getting into other precision components like alternative brusher, a lot of mechatronics, which is robotic arms for surgical robotic surgeries, and other mechatronics, assembly lines on autocoms, LED frames, sensor controls, and the likes. Okay, medical connectors, right? All of these, the tolerance level is very little. So that's the core strength of the company. The learning for everyone here is you have to first identify what is the core strength of the company to even talk about deals and everything. Finance comes बहुत बाद में. Please understand, accounts, finance, that's a derivative, that's an output of the input. This is the input here. If we didn't have precision tool making or precision engineering, your finance and didn't have this kind of clientele, finance nahi hota. Okay, accounts kuch nahi hota. Now with that, okay, this is the kind of financial it's delivering. It's delivering a very healthy EBITDA. Okay, actual EBITDA 29 and 2018 has been in the range of 22% to 18%. It is very, very healthy. This kind of EBITDA you only see in IT companies, right? Technology companies. Am I right? Makes sense? Very, very rarely in engineering, especially automotive space, you'll find this kind of an EBITDA. Okay, so that's just financial. Because of the engineering strength, it has the client strength. Because of the client strength, it has a financial strength. Okay, and that's the reason why the cash flow ROIC is very, very high, higher than its peers. Okay, despite automotive industry being plagued by working capital issues. Okay, this company is doing fairly well in terms of generating cash, more importantly. Now they want to seek an M&A. Okay, guys, this is a transaction I worked on live, so I can answer a lot of tough questions. Okay, ask me everything. They are seeking M&A by legacy factors. One of the reasons that triggers M&A. What is a legacy factor? The promoters here, the two brothers, okay, Prabhakaran and Sashidharan, they are almost about 60 back then. They will be turning about 70, 72 now. Okay, they said, 60. They ran out of the fuel. They said, okay, I think we built this. Now we need someone to take over. Their sons are not keen. One son is into gaming technology. The other son is doing into digital signal processing. So different fields altogether. This business doesn't excite them. So they have to now sell it off. Okay. Who are the potential suitors? Okay. Yazaki, you recall Yazaki is one of the clients here. So in the engineering space, if you have a very strong clientele, that itself can become a potential suitor for an M&A. And Yazaki, guys, is a privately held company, $14 billion of revenue. Okay, it's about 30% EBITDA. And Yazaki, it's the second largest component manufacturer in the world, connector manufacturer in the world, privately held by the Yazaki family, Shinji Yazaki. Okay, right now. TE Connectivity. TE is again a $14 billion company, number one in the world. TE is nothing but Tyco Electronics. Okay, that's the short form. TE. Potential suitor. Again, a client becoming a suitor. Amphenol, a $4 billion company. Okay, the story goes like this, right? Mr. Prabhakaran, the founder, started his journey in the automotive tooling space. His career when he graduated out of the NTTF, okay, in Harvard. That's a tool making, hot. It's a tool making hub. The first job he got was at Amphenol. Okay, it's a Hong Kong based company, and that's where it started out. So he reached out to his former employer as well. Hey, I built this, and I know I'm looking for an M&A. Okay, Alberts Group, one of the leading precision engineering companies in the world. Okay, it's a Dutch group. Mr. Palmer's heads it. Okay, they do a lot of medical devices, right? And it's perfect. They didn't have a space. They didn't have a presence in India. TE has a presence in India. Yazaki has a presence in India. In Pune, they have 2 plants. Okay, TE Connectivity, they have a presence in Pune and also in Kerala. Okay, Amphenol doesn't. Alberts doesn't. Amphenol has, sorry. Alberts doesn't. Motherson Sumi, everyone knows, right? It's listed entity, it's $5 billion kind of thing. Now, these are the potential suitors, right? Each one of them bid. Okay, finally, the deal was like this. The promoter had to choose between $16 million versus $23 million. Okay, that's the deal. My question to you is, if you are the advisor to tech or if you are the promoter of tech, which one will you pick? Which deal will you pick? The $16 million or the $23 million? Are we all there? Is everyone still here? Is it helping?
Yeah.
Giving you
Yes.
real world perspective, the heat. Okay, batao. Which one will you go? Ahmed, Diksha, Karishma, Kaushik, Kushbu, where will you go? Kritika, Meghna, where will you go? Which deal will you take? Nalin.
So who are the two players? Can we know the name at least?
I will tell you the name. I will tell you the name. So it's Yazaki and TE. I won't tell you who offered what. I want you to tell me what will you do. This is, guys, this is what an M&A bank does day in, day out. Okay.
Well, if practically if we go, then we go for 23 million.
Okay.
Because
I
amount
think
is
we'll have. Yeah, but I think we'll have to check on other aspects as well.
Yeah.
Apart, means legacy is definitely going to be one thing, but cost, productivity, geographical location, and based on that, okay, like if we just talk about numbers, standalone numbers, then yeah, 23 million. But you know, it's more than that, more for the eye to catch than what we see. So
Yeah,
Voting,
same thing.
voting rights and all those things need to be checked.
Okay. Okay. No, you are selling out 100% of the company. Okay. Where will you go? Which one
I
will you
guess the terms of shareholder agreement is also something we need to know. That
Okay. Very cool, Khushbu. Okay.
If you talk about numbers, then obviously 23 million will go.
Okay, Diksha. Okay. Okay. I hear you. Anna, you have a point here.
I was thinking of the 23 million because it looks bigger. I am sure there is more to it.
Okay. 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 So here's the thing. The deal. I'll tell you now. Let me tell you what actually happened. Okay. Now, Yazaki. Everyone loves Yazaki. I mean, firstly, tech is supplying to Yazaki, and it's very, very difficult to convert a Japanese client. They're very, very demanding, right? Nalin, that makes sense, right? Extremely
Yes,
tough
yes.
to sell to Japanese. Very demanding on quality.
Yes.
And think about it here. Tech is selling to not one Japanese, but 5 Japanese companies: Yazaki, Toyota, Kaihin, Hero Honda, which is, of course, they'll have to get permission from Honda, and Maruti Suzuki, which is again Suzuki. And they're selling to another extremely demanding customer, SKF, which is a Swedish company. They're also extremely tough to sell to. Okay. Plus, they are selling it to Airbus. Now, you just can't be on any Tom, Dick, Harry kind of person selling to an aerospace company. You got to be very, 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 very sure who you buy from. Okay. Now, if the natural choice was Yazaki buys this company, because Yazaki accounted for about more than 30-35% of revenue of business. Okay. Now, Yazaki, as you know, being Japanese, they take their time. So we said we first reach out to Japanese. I first reach out to the Japanese. Yazaki said, okay, fine. They came down to India, did the initial due diligence, flew back, say, okay, we'll take it to the board. Mr. Shinji Yazaki needs to see. Okay. Yazaki-san as is referred to. Said, okay, take your time. Said, we'll take your time. And Japanese take a long time. We were patient. Nothing was happening. Nothing was happening. At the same time, he started reaching out to Amphenol, the second preferred buyer, because fast chemistry. By the way, Mr. Prabhakar started out tech by leasing out one lathe machine out of Amphenol in a single garage, makeshift garage. That's how you build. That's how you build tech. Okay, and he started his career also with Amphenol. That's he said, okay, can you want to buy? Amphenol said, no, they're not keen on India. They're more focused on the South Asian markets, more focused on Thailand, Vietnam, and setting up, larger units in those geographies. And of course, China, Shenzhen, and all. So he said India doesn't make sense because of labor problems. He said, okay, fine, doesn't matter. Then he reached out to Albert's group. We want to buy out. Why? Because hey, we have medical technologies, we can do medical connectors, we can do switch boxes, we can do sensor control systems at the same precision level as we are supplying it to OE and Airbus. Both are extremely demanding in terms of precision, and then anyway supply to the Japanese. So, and we have the technology up, we have the tools also ready. We have a tool sampling done as well. Okay, sounds good. Alberts walks in, he said, okay, very nice, pleasant guys, Dutch guys, and the French guys come in. They spend maybe about 4 months, 5 months doing the due diligence, give us a term sheet, and then, okay, fine, done. Now comes Motherson Sumi. Okay, fine. Do you want to reach out to Motherson Sumi, the big boys? Mr. Sehgal, who runs the company from Australia. Okay. Now they come, Mr. Chobe comes in from Delhi. He said, okay, look, everything looks good. We'll issue you the final numbers. So before meanwhile, Yazaki was not responding because they said they need more time. Being Japanese. Okay, Japanese generally take a long time to decide. But once they decide, they're very loyal. Okay, so Amphenol is out. Motherson Sumi said they're interested. Taiko said, okay, fine. Albert says, fine. So what happened is Motherson Sumi was the first to put in a formal bid. Okay, and they bid for about $12 million. Yeah, it was about $12 million. Okay, so we said, wow, great. We don't have an offer yet from Yazaki. Taiko has not put in the bid yet. Amphenol said a no. Alberts is still walking the talk. Okay, they've not reached a conclusion. We say, okay, let's go ahead with Motherson Sumi. Okay, after waiting for about 6 to 9, almost not 6 to 9 months, almost about 11 months. Okay, let's go ahead with Motherson Sumi. The deal, everyone arrives in the Pune plant, the corporate office. Okay, ready to sign the shareholders agreement and the share purchase agreement. Okay, we thought everything's good. Okay, good to go. But on that day, Mr. Chobe says, we have a problem. We cannot go ahead with the deal. He said, okay, what problem? On the day of the deal closure, you're telling this deal can't go through. Okay, we already announced it. I mean, not stock exchange, but we already announced it to the vendors. You have to announce it to vendors. Hello, deal announcement also done to vendors and the customers. Okay, you have to announce it to them and take their also NOC. Okay, so said, what the hell is going on now? They said, because your ETP, okay, which is the effluent treatment plant. There's an effluent treatment plant, right? ETP. It's not in compliance with the Vastu norms. Literally, this is the reason they gave us. Okay, so said what? And you can't lift the ETP plant and just place it somewhere else. It's not that. It's a concrete structure underground. So, and there's a lot of cyanide into it. Okay, because of the ETP, and there's brass. There's a plating unit as well. So that creates a lot of cyanide, gets collected in the ETP, right? This is crazy. So that was like a hard hitting thing. This is like madness. They could have spotted this on day one and told us it's not going through, right? But they said it's our oversight. We noticed it right now. Okay. So guys, I'm not making up even 0.5%. This is exactly what happened. Deals, as I said earlier in the day, deals will not be closed for any XYZ unknown factors. You got to be prepared for everything. Okay, so unless the money is in your account, the deal is not done. It's not closed. Okay, just discount what the journalists say. They will not understand these technicalities. Okay, they don't even have the intellectual horsepower to get into these kind of conversations, okay, to understand the nitty-gritty. So don't to discount the media narratives. I said, okay, freak. Mothers to be gone. We took a breather. We took like a 2 days break. We had to cool down. I said, okay, now back. What do? We chase Alberts and TE. Yazaki called up again. They said, we are still looking, the same typical Japanese style. Okay, they need a board permission. And the complication was that Yazaki has a joint venture in India with Tata Motors. So they said, we have to take an NOC from Tata. I said, oh God, now this will go forever now, because even Tata moves slower than the Japanese. Okay. Said, okay, fine. You guys come whenever you want to, but we are going ahead. They said, okay, fair enough. We'll come whenever we have to, and we'll give you a premium if in case we get an NOC from Tata. So T goes, Amphenol's out, Motherson's out. Albert, we chase Albert's, Mr. Wim, his name is Wim Palmer, and said, okay, Wim, what do you want to do? Said, okay, fine. Okay, put in a bid. They said, okay, finally they put in a bid, and guess what? How much did they bid for? Can someone guess how much did they bid for?
$23. I don't know.
Yeah, you're right, Kushbu. $23 million. $22 million. Alberts was on the higher side, 23. Is it? Wow. From 12, we've jacked it up to 23. Wow, something's in the making. Because think about it. Why do you think this happened? Let me flip a question back to you. Why do you think this happened? From 12 million to $23 million. Why do you think this hike happened? Come on, I want you to think like deal makers and put yourself in the shoe of the buyer. Why do you think
competition maybe?
What competition?
Because they will have because the same company in the industry who's not like they'll have the resources to produce something which their competitors just rejected, or maybe I don't know. I'm thinking that way.
No. So why do you think the bid was from 12 million to 23 million? 12 million, remember who put in? Motherson Sumi. वहां से 23 million Alberts क्यों कर रहा है? Come on, guys.
Maybe they want to give the higher side so that the take should not think about anyone else. They have seen it. Maybe they have got the information about the previous deal as well, that it was on the 12. But I think the what I can say, product is promising, and they have the capacity to do it. So that's why maybe they have given the higher front.
So from 12 to
so
23.
That if any, so maybe
11,
if the what Yazaki, yeah,
it's 11. It's
maybe
11
if
million.
Yazaki comes, yeah, I know.
Could
Maybe
it
if
be because
Yazaki
of the
comes, they don't
legacy,
want to.
like the brand value and the amount of customers it had? It covered up the majority of the brands.
No. Okay. I'm going to put it in the chat. Anyone else? I'm going to put it in the chat. Urgency. 2. Set foot in India. Alberts didn't have an India plant. Remember? Do you recall that context?
Yeah.
Motherson Sumi has. Everyone else has, right? Amphenol has. TE has. Yazaki has. Motherson has. It's only Alberts who doesn't have. And it's losing out to this opportunity, right? So guys, the learning is valuation depends on the urgency of the buyer and the seller. It is not a discounted cash flow. Okay, that's not how valuation happens. Okay, does that give you some more light on valuation and how M&A happens practically? So yes,
Yeah, so deal rationale for them would be geographic expansion.
Exactly. Spot on. The deal rationale for them is right here. It's geographic expansion, right? Right, and also distribution, right? Because they already have ready-made plans with the 5 major Japanese customers, right?
Yeah.
Okay, good. Now we were like happy, great. So then we said, Alberts is a new entrant in India. Will they be able to manage the labor unions and all of it, right? The cost structure, procurement challenges, regulatory infrastructure, regulatory environment in India. So we thought, let's go to Tyco and just check with them once. Okay. Now it's a race between Tyco and Alberts. Yazaki has still not responded. So we actually have written them off, and we know that Tata is now going to move very quickly. Okay. So we said, boss, we have this $23 million deal, but the catch is it's a milestone deal. You recall this? The milestone based deal I gave you, transaction type.
Yeah.
Everyone, do you recall this? Which one do you? So we asked, which one do you prefer? Milestone or a straight jacket? What do you prefer? What will you prefer?
Straight jacket.
Straight jacket. Okay. Okay. Any other preference in the room? Straight jacket or milestone?
I have a question before that to clear doubt
Yeah.
about
Yeah.
So is it like in milestones? So we set certain terms that if we cover up this much, if we, for example, the gross profit reaches this much, we'll pay 40% of the deal of the transaction value, like that, right?
Yeah, over the next 4 years, or it could be 3 years, or it could be 2 years.
So for example, of the 4 years, in the 2 years, though that gross profit limit was not reached. So does the company have an option to step back from the deal or something like that?
So the pro rata of the 40 crores is not paid. Simple.
Okay, so then I guess I'll go with milestone.
With a milestone as a buyer. Okay. Okay. Fair enough. So here's the thing, guys. You have to understand where is the buyer coming from. Now you have to understand the sell side. Okay. Legacy factor. Milestone deals typically happen when the original promoters will continue to stay in the business for the next 5 to 6 years. But the promoter here said, I'm tired, I'm 60, I want to enjoy my life, I've built a great company, okay, and I think I'm done with the automotive space, okay, I want to take the monies and do something else, right? So it's a legacy factor. So the seller's not interested. Generally the seller said, I like the $23 million is higher, but they're asking me to stay back for 5 years. Okay, I don't want to stay back for 5 years in the company. I just want to exit. So let's see if Tyco can give us a straight jacket. So we go out to Tyco and say, can you give us one straight jacket number? What is it? Okay, what is it? Right? Tyco said, okay, they actually responded in less than a week's time. Very quickly, very swiftly, and they said $16 million on the table, take it right away. If you agree, we are flying down from US to India on the next available flight, and we'll wire transfer the money right away. Okay, and then finally, that is the deal that we closed, not the $23 million. Right? So what do you learn? What are your learnings out of this entire? Now you have so much context on this deal, right? What are your learnings?
Learnings are that we cannot rely solely on the numbers.
Yeah, it is the quality of the numbers. That's what I'm saying. Only accounting commentary is not important. You have to understand what drives those numbers. Good.
Yeah, we have to look at all the aspects behind that.
Correct. So, okay, Diksha, and others.
Deal rationale is pretty important in any M&A.
Absolutely. It's the nucleus of the deal. Absolutely. Yeah.
And we have to see what exactly we wanted as a buyer and what exactly seller is giving it.
Right.
Because what exactly you told 23 is not, obviously it's not important for him because he wants to leave the business. He wants to take a rest from the business. So that's why he
Right.
went on 16. The terms and conditions applies where, and according to that, we have to make a deal.
Absolutely. Absolutely.
Uh,
Absolutely.
can I ask something on a lighter note?
Saurabh. Heavy. Go for it.
What was the upfront fee charged for the consultancy?
There was zero upfront fee. There is a success fee.
Okay. Okay.
Right.
I know, sir, we are asking about the Raju, how much Raju make up from that?
Yes, I made enough to not work for a few years after that. Yeah, but that's against. But I'm like a workaholic. I will work like even on Sunday I'm working, right? So I can't stay still. Right. Yeah. So I mean, after that we had like a very indulgent party, right? So yeah, a lot of kush, a lot of other things. So yeah, it was fun. So okay, so learnings, guys. M&A is not just mumbo jumbo of numbers. Okay, you need to understand what is the transaction value, what is driving the transaction value, what is the terms of the shareholders agreement. Okay, what kind of deal is it? What is the mode of payment? Is it all cash, stock? Very, very important. What is the deal rationale? If you do not get this, I'm sorry, this is then you are just a another audit company or another accounting company, the big four as they call, right? Just punching in numbers and throwing out data, right? It's not helping you do the deal, stitch the deal. It's like a surgeon. You got to understand every part of the body real time, what's happening. Accordingly respond and stitch the deal. Okay, that's why I said you should be able to find the investors, structure the deal, negotiate it, and most importantly, close it. Okay, sounds good. Helpful? Was this case helpful?
Yes, yes. Yep.
Yeah. Gets you excited. Now you will only be able to do so when you pick an industry and like a mad person try to understand everything that is happening in that industry. Products, players, technology, regulations, buyers, seller, who are the promoters? Let me meet them. Let me like a madman cold call them. Right? Out of 100 cold calls, at least 2 will agree to meet me. Correct? So visit all the vendors, visit the distribution center, go to the Kurla market, understand how the second-hand market works. If it's automotive, autocoms, right? The same thing you replicate for other industries. Right? So it's a bit of a madman approach you have to take. Okay, in this space, private equity, restructuring, turnaround, and IP. Okay, so that's why I keep telling. It's not for the faint-hearted. It's for someone who continuously enjoys, expanding intellectual horsepower. So you need to just be on the go all the time. Okay, sounds good. Any questions? We've almost at the end of the session now. 4 hours. 4 hours was worth it. Had fun. Good learning.
Yeah. Great learning.
Yeah, more clarity. Any questions on the closing side?
Rajiv, one question.
Yeah.
So when we talk about legacy, like for a seller, deal rationale is legacy. So what do we mean by legacy? That the brand name should continue or the business should continue?
I mean, see, in a B2B business doesn't matter. In fact, tech was rebranded as key connectivity.
Mm-hmm.
Doesn't matter. Consumer businesses, it's very case to case, right?
Yeah.
So, see, because what is a brand? What is a brand? Brand is how the product works. Brand is not the color, font, tagline, or jingle, right? That's branding.
Yeah.
That will always change, and that can always change. Brand is how do you feel about the product? Is it doing your job? Is it not doing your job? If it's not doing the job, it's a poor brand, right?
Yeah.
So I think that's immaterial. And it changes.
Okay.
Situation to situation, it changes.
Agreed.
Cool, guys. So hope this was helpful. And now you understand the entire jungle landscape. Next time we meet, we're going to start with Excel. Okay. Meanwhile, you have your read network. Okay. Cool. Should we end the call?
Yes.
Yeah. Thank you.
Awesome. All right, guys. Take care. Stay safe. Talk to you soon.
Raj, please share
Thank
this
you.
Word file, please.
Yeah.
Yeah, I'll share the Word file just like last time. Yeah.
Okay.
Thank you. Thank you.
Thank you.
Bye, Rajir.
Bye bye.
I have a question.